And we are live. How's it going? So looking at the macro today, welcome to the channel. Welcome to the morning macro slash market fundamental slash technical report. Today we basically have Chinese growth starting to slow down over the weekend. We got the Chinese GDP, some of their productivity numbers, and China is starting to slow down. So the question is and we got earnings this week also. We have Tesla earnings this week. Everybody's hyped up for that. Everybody's hyped up for the Tesla earnings. Tesla's already, by the way, breaking out. Let's take a look at Tesla really quick on this chart on the left-hand side. It has been consolidating for a while. I think we head for all-time highs when it comes to Tesla. I think people are getting FOMO. I saw some, I got a couple tweets, a couple friends that were giving me some, that were, and who knows, it could be rumors, but basically dark pull, or I'm sorry, big buying last week on Tesla. I don't know if I really go with all that, but for the most part, I know there is FOMO going into earnings. We'll see how it actually works out. So there is the Tesla all-time high. It's not that far, even though it seems like, oh no, it can't get there. After earnings, they could make a big move to all-time highs. That's pretty, and this is a bearish pattern. So we could, break down after earnings and come back up. Either way, the Tesla earnings are going to be big. And then we have, you also at the same time, you have the dollar breaking down. This has been the story, right? Lately is the dollar actually starting to show a lot of weakness. And this is a risk on signal. It's, China, Japan, other currencies are now strengthening versus the dollar, which, helps global trade, because global trade, when the dollar is weak, it helps global trade. It's a little cheaper, right? It's like a haircut. Your transactions costs are a lot lower. And also that helps earnings for multinationals and expectations more than anything. The dollar falling helps expectations. Okay, let's move over to 10-year bond yields, the cost of capital. We always look at the macro. It looks like we did have that blow off top here. And what this is interest rate risk. Looks like it is alleviating following the inflation report, right? And that was a really good inflation report. Some people don't believe it. They think, oh, you can't believe inflation. Wow, we got Zoom breaking out down here too. This is something I might have to add to today. Zoom starting to break out. Anyways, so we got the US dollar, right? I'm sorry, you got 10-year yields starting to roll over. I don't know if they actually roll over because the economy is stronger than expected. So it's not a promise. But when the Fed actually does pivot, when the Fed announces the inflation, the war against inflation is over, these should collapse. Also, here's the key thing. Here is the key thing, right? This is just a reflection of bonds in general. If bonds are now printing at a higher interest, right? So for instance, inflation's at 3% headline, energy, food, all that. Well, if you have actual bonds giving you, what are we at? The 10-year yield's at 3.8. So we're at I don't know if you can see this, 3.8%, right? Let me zoom in there. You got bonds at 3.8%. Wow, that was ugly. Okay. And then you have inflation at 3%. Let me make that 3 a little bigger. This is going to be sloppy. Okay, 3.8%. That's what you're getting on your bonds right now, right? If you're at the money market funds, even more. Now, inflation is at 3%. Okay, so now ideally, what you're doing is you're yielding that 8% in real terms, right? It doesn't work exactly that way, but for the most part, I think this could be a bid for bonds. This could make bonds bid up. And if bonds do bid up, because people are still uncertain about the second half of the year, there's still a lot of uncertainty on whether, the economy can actually stay strong or remain above the positive level, right? A lot of, and we'll go through that later. But for the most part, if this is the case, those bonds, start to bid up, and you do get US Treasury yields roll over, and that's going to bid up risk assets. That's a lower cost of capital for riskier types of assets, crypto, Tesla, big tech in general, or more, things that look further out in the risk curve. Okay, so also I want to mention right over the weekend that the US Treasury interest payments are now at a record high. They're paying $1 trillion, I believe. And don't mark my words, I will get the facts on the actual macro report, which you should subscribe to. Link in the bio, link in the description. The macro report will have, this information, but the US Treasury is now paying the largest interest bill that it has for a while. And what that means is growth will slow unless the debt gets monetized at some point. So I'm expecting the Fed to flip at some point Maybe it's not, maybe it's not anytime soon, but they're going to flip by the end of this year as long as inflation continues to make progress. And they will start buying these US treasuries, and this yield will go back to its historic lows, right? I know some people believe that yields are going to go higher for longer, but the trend for the last 50 years has been lower for a reason, because we take out more debt. That is our economy. We use a lot of debt, and not that we just use a lot of debt, but this is the interest. It has to go lower. As we take out more debt, the interest on it must go lower, or the economy doesn't survive. All right. So I think yields roll over. Maybe it's not anytime soon, but they will roll over at some point. The cost of capital will have to come down, and that is bullish for risk assets. All right, let's jump back into it. Now oil. Let's look at oil really quick. All right, we'll get to the markets. Right now we have S&P 500. Let me double check. S&P is hey, it's starting to lift right now. S&P is starting to lift. We're looking bullish. Tesla, like I said, Tesla's breaking out. Qs are up. IWM small caps are up. The Dow is also up. Everything's up. And I think the Fed doesn't speak for a while. We might have a blackout period going here, which means that it's all about the technicals, right? If we're in a blackout period, the Fed doesn't speak. I don't know if that's a fact. Okay, I didn't check that out, but I did read that the Fed won't be speaking for till I think 10 days or something like that. I'll double check that. Don't mark my words. If that is the case, the market always moves higher because there is no uncertainty coming from the Fed. The biggest uncertainty is probably going to be the strike from UPS. How is that going to go? Are the UPS workers going to go back to work? Because they're a big part of the supply chain. How's that going to actually work? That would help. That would create some supply side inflation if UPS shut down its operations. I really doubt that is the case. So I really doubt that actually comes to fruition. All right, so here we got oil finally starting to. Good morning. How you guys doing this morning? Good to see you. Yeah, what's up in the comments? Good to see you guys. Sorry, there we go. Let's get this out. Hey, Dimaj, what up? What up, Dimaj? So really quick, guys, look at this. The price of oil. We know, if you're keeping up with the newsletter, this is the biggest risk. This is what I'm most worried about, but it looks like it's, today at least, or the last couple of days, it is hitting that trend. It's rolling over. If oil really flushes back down here, inflation expectations are going much lower. And also Russia now, we've been talking about this narrative. Russia is now overcoming the Saudi Arabian but the economy for producing the most oil. And what does that mean? That they're going to lose market share. We talked about this a couple of weeks ago. If they lose market share, will they allow that to continue to happen? I don't think so. At some point, you're going to get Saudi start hitting the oil button again, start producing more so they can get back their market share, because you don't want to lose market share. You lose margins and revenue. And Russia is now, taking that on. Now, there's other risks too, but the point is, for the markets, for crypto, for risk assets, we need oil to come down further to sustain this tailwind for inflation, right? This inflation tailwind where it is dropping much faster than most people's expectations. All right, let's look at the VIX volatility. We always go through this. Volatility is still falling. We still have lower volatility, not worried about that. This is the volatility of the VIX, almost at new lows. This is NASDAQ volatility. Looks like it is consolidating a little bit. Maybe it does have an upside move, but it is trending lower. The MOVE index coming down, right? This is bond volatility. Why is that important? Because it has to do with lending and treasury collateral. And, bond volatility has been trending up, so it's not done yet, but it is coming down. Triple B spreads, big one here, which is, this is basically debt for, credit debt for the equity market, still coming down, which means people are taking risk. There's a risk appetite for, equity debt. That's good. That's good for stocks. Okay. Junk bonds still moving up. Okay. We don't need to go through too far into that. And right now we have the S&P, right? We'll zoom into this, the S&P on that wave 2 FOMO path that we've been pointing out, breaking new highs. You saw that cup and handle. We just saw, look at this cup and handle. We just got this cup and handle, really small, broke out. Now we may be consolidating for a little bit and before we move higher. But for the most part, this is very bullish signal, like we've been saying. Very, very bullish signal. Technically, macro, fundamentally, well, the biggest signal next is going to have to be earnings, right? Do we actually beat earnings expectations? And we do have, FactSet is showing that most stocks are actually set to guide higher in earnings. And if that is the case, we aren't going to be in that wave 2 FOMO. We're going higher from here. I think we go to all-time highs, like I've been saying, by the end of the year. We might have a blow off top and then have a big correction, but markets are on fire. A lot of people are off sides and they want in, right? They want into this rally. NASDAQ, still moving up, right? We little sell candle there. Let me throw the volume on here so we can see what the volume's looking like. But for the most part, the buyers are still in control. Buyers are in control. Dow, right? And this is market breadth. Dow is still at that level. We haven't broken out yet, but Dow's like 5-6% from the all-time highs. IWM, very strong, still moving up. This is small caps, right? The small caps are going to do best. And this is a break of trend, but the small caps are going to do best when those yields come down, when the cost of capital comes down. This is equal weight, S&P equal weight, still grinding higher, man. So you don't hear there's no market breadth. Well, if we look at the equal weight of the S&P 500, it is moving up. It is slowly making higher lows and higher highs, right? At least for the past year. So we're almost at the February highs, right? When we had that big upside move when global liquidity came into the market. Okay, let's take a look at Bitcoin, still consolidating at this level, very bullish, right? Oh my God, it looks ugly. Bitcoin is still consolidating at this, $32,000 to $30,000 level. The longer the consolidation, the bigger the breakout. I expect a big, as we call it, the God candle. If it prints correctly, boom, straight back to 37,000 is my next target for Bitcoin. And I think it gets there pretty quick, looking at the macro backdrop, right? As things come into as we get more clarity on the regulatory front, right? What is actually considered a security versus a commodity? That is still, then we're not clear yet, but it looks like there's a little more crypto positive sentiment in from the SEC. I mean, the fact that the judge ruled, what is it? Not Ripple. Can't even think right now. XRP as a security, right? I don't know if the argument lasts. That's still going to be good for crypto. It has nothing to do with Bitcoin. But as a narrative in general. Oh, as a matter of fact, we did get some news on Descript. We had the biggest inflows for a while coming in crypto. Now they're not. This was in other equities, but we're getting inflows coming in. These are not short squeeze. This is real inflow coming in to the crypto market. Here's Ethereum grinding higher, slowly grinding higher. Also with Ethereum. All right, and then that ETH to BTC chart, which is Ethereum outpacing Bitcoin, still hasn't really moved. It's still consolidating, but hey, it looks good. And we are going through some, before we get into the technicals and more news, we're just going through what is the market looking like from a technical perspective. Okay, XLI, industrials making all-time highs right now. The industrials sector making all-time highs because we are onshoring. We are onshoring manufacturing, right? We're onshoring manufacturing. We're still building. The Biden administration is still printing fiscal monetary money, and expect, Caterpillar, Deere. As a matter of fact, look at Let's look at Caterpillar. What does it look like? Caterpillar's been grinding up for a while, looking straight. It probably just keeps going all-time highs, right? Caterpillar looks good because we're getting that fiscal spend, and they're going to benefit from that. All right, utilities. They're still wedging. I don't think we do much for utilities because we're in a deflationary period, or at least we're heading for deflation, where energy prices are cheaper. Pretty much everything gets cheaper, or it doesn't inflate as much. XLY, this is consumer discretionary. People are spending in the economy, right? Whether it's cars, automotives, travel, lodging, hotels, whatever it is, people are spending this summer, and consumer discretionary is doing really well. Okay, consumer staples, pretty stuck. They're pretty stuck because, they already were pressing all-time highs. There's no recovery there. They probably move sideways and slowly grind up over time. Communications up a lot because, again, there's a bid for, well, how do you explain this? Communications is really a big part of technology, and tech, I think tech is really just pulling communication services higher because of all the infrastructure that we have to build. The Biden administration passed the Inflation Reduction Act. Somewhat that's going to get caught up in the communication services sector. The the internet thing? It was the internet initiative. So a lot of stuff from fiscal is going to pour into the communication services sector just because by the nature of it is technology, right? So we're getting that move up. The banks, this is going to be big. XLF, what do the banks do? They keep moving sideways. We also are keeping our eye on KRE because that is the regional banks, right? Are we going to get risk in the regional banks? So far, it hasn't, rolled over yet. It's the KRE is still moving up, and that's bullish for the market. If we do roll over, well, it's still bullish for the market because we expect the Fed to print more bank term funding program. We look at the energy sector. Energy is flat. It's the earnings are actually expected to be pretty neutral because they were so high last year, and now the energy prices are down. there's probably going to be a rotation into big tech as we've been seeing, because the energy trade is pretty much over. Sorry to crush your hopes, but the energy trade is over. Maybe some individual stocks, but as a whole, oil prices are down, natural gas is down, electricity costs are down. At least the inflation is down, right? And then we have the real estate, commercial real estate, but real estate in general. That's basically what we're looking at for the market. Now let's switch over to the actual macro news. What we're seeing here is China, right? We take a look at China and GDP growth. The GDP growth for China came in much lower than expected, right? This is Chinese GDP growth. It's still moving up from July of 2022. So we're still grinding higher for Chinese GDP. Why is this important? Because it's China's a big part of the world economy. And if the world economy is going to continue to move out of this recession or fall deeper into recession, it's going to take China either falling back into recession or starting to grind back up. So what we saw is the actual GDP was 6.3%, and it was expected to come in at 7.3, 7.1. So China came in weaker, but they're still higher than the previous month. So is it that big of a deal? No, I think what that means is, hey, they're still growing. The GDP growth is still accelerating, but more, maybe we do see more stimulus from their government, more global liquidity, which would push liquidity higher. All right. Now, taking a look over at June, what we get is, not at June. If we're looking at industrial production, right? This is important. They actually beat industrial production, right? So they got 4.4 versus 2. That's really misleading because GDP growth is lower. It's more lagging. This is more coincidental data. So their productivity is picking up. That is a good sign of growth there. I don't think it's that negative. GDP growth quarter over quarter, we're getting Chinese 0.8. Now that was actually a big drop quarter over quarter, and so this is the signal that China's going to need to pick it up. China's going to need to pick it up. I don't know how they're going to do it. Actually, we do know they're going to print more, which is why I think this is very bullish for the macro over time. They're going to keep printing money in capital markets to get their growth stimulated. Retail sales, nobody's really buying, right? Their consumers are not really purchasing much when it comes to retail sales. So they do have a growth problem right now, especially coming out of the lockdowns. And when they're in QE, they're not growing as fast as people expected. So this is somewhat of a small issue. It's not really a big issue because you know what they're going to do? They're going to print more. So the GDP came in at 3.1, pretty much not GDP. Retail sales came in weaker than expected. Okay. So these are their consumer spending basically on more goods versus services. And they are falling sharply. April, May, June. They're falling sharply. Maybe they rebound. We'll see what happens. Maybe there's more details going on in China that we don't know about. All right. So that is what we're looking like in China, Indian, and is this inflation from Italy? Okay. Italy's inflation is coming down. Okay, great. Anything more significant here before we move on? We did have the New York State manufacturing. Was this on? No, this is today. Yeah, New York State So one of the signals for the U.S. economy is a regional in the New York State area, the regional manufacturing index. Hey, it stayed positive for 2 months in a row. I think this is the first time we've been 2 months in a row positive for a while. And this could be signaling a recovery. We talked about this last week, which is we're seeing the ISM manufacturing index. Actually, the new orders are going higher. New orders are starting to pick up month over month, and inventories are dropping. So that's a sign the business cycle might be turning back up. By the end of the summer, we said maybe we get a recovery in the manufacturing index, the ISM. So this is one signal. This is one of the pieces that takes us higher. And we'll get the rest of the manufacturing, regional manufacturing surveys throughout the week and see if that's actually true. But for the most part, New York State manufacturing index is signaling that, hey, we're not collapsing. You know, the manufacturing economy might be weak in recession territory, but it's holding on where it's at. We could be bottoming here, right? Big signal for the stock market, big signal for the economy. We're making our way back, and we know that's coming from, again, a lot of fiscal stimulus, a lot of onshoring from, China. Well, onshoring, onshoring stuff or builds or supply or man, I can't even think right now. Onshoring, basically a lot of stuff that we would be doing in China. We're doing it here. So we're getting jobs, right? We're starting to recover overall. Um, and that's what we have today. Tomorrow we got retail sales, so we'll see where the consumer's at in the U.S. tomorrow when it comes to goods. I don't expect it to be strong. I expect more weakness, but maybe starting to stabilize. Maybe we will finally start to stabilize in the U.S. and we'll keep our eye on that. All right, let's move over to some of the bigger trends that we have here. Tesla. Now we do have Tesla earnings this week. This is going to be huge. Let's see. Not sure what that was. Okay. Anyways, getting some signals here. Here's the trend, right? Here's the trend for Tesla. It is it's an ascending triangle or wedge, which is usually bearish, but we just don't know how that's actually going to play out until we actually get there. All right. So what I'm going to do is we're here on the stream. We're here on TikTok. Let me know if you guys want me to do any technicals. I'm going to take a look at some of the news that we are getting that's coming into the, let me see. First, let's go on the trading. Let's get on our trading station. I'm going to throw myself in the corner, right? All right. So let's see what we got here. What do we got here going on? Oh, Janet Yellen also. Janet Yellen is, I think, trying to speak with China about tariffs and basically temper down some of the concerns with our relations in China. That's always good. It's always a positive. I know a lot of people think that China's our big enemy, which is true, but at the same time, we do a lot of commerce with China. So it's not like you're just going to push them away. We just don't want them to be more advanced than us technologically. So we'll see how that actually plays out with Janet Yellen. The market's probably going to like that if they come to some type of deal, or, and I think a lot of it is about the dollar. The dollar's so strong. And if the dollar can weaken the Chinese economy, it helps the Chinese economy to grow to some degree. All right. So that is definitely in the pipeline. Now over here, looking at Tesla, like I said, let's go to that 30-minute chart. Man, a big upside mover. We already broke the previous resistance this morning. And I think this may be a lot of FOMO going into earnings. Some people might be thinking we gap up. We gap up during earnings. There's a lot of rumors that there's going to be a really good report. Who knows? We'll wait till we actually get there. We'll see when we actually get there. Well, they're probably going to announce the Cybertruck release during earnings. Who's this? Roku back above 75. So they'll probably do that. Ford cutting prices also, trying to keep up with Tesla. I don't think they're going to be able to keep up. Wedbush reiterates outperformance on Tesla, maintains a $300 price target. Maybe some upgrades. Maybe we're seeing some upgrades going into the earnings season. Wells Fargo maintains equal weight on Tesla, raises. So we're getting some price target raises. I think that's kind of what's going on here for Tesla going into the earnings, even though the price, they're raising their price targets, but it's still below the actual, stock. That's always the story with Tesla though. Let's see, what do we got here? Any plans today? Oh, any plays today? No, I'm kind of just sitting on my hands. I'm taking some bigger swing trades. So right now, Zoom, if you're looking, let's see, Zoom, I'll probably be adding to Zoom. I'm looking at AMD also. Where's AMD at? AMD's pulling into that trend. If it can find some support, I'll add. I'm looking at some bigger swing trades because I think we're heading to wave 2 FOMO. So no exact day trades. If you have something you want me to look at, I will. But I am looking at some bigger swing trades here. Tesla, AMD, Zoom. I was looking at Roku, but it stopped me out last week at the end of the week. Roku stopped me out. But now it's starting to come back. We'll see. Roku needs to hold. It needs to hold that level a little longer before I re-enter. Took a little loss there. But S&P is, you can see the S&P has been wedging here, and now it's starting to break out of this, not wedge, but it is breaking out of this descending channel, right? This flag pattern. So very bullish price action here on the S&P 500. So we'll keep our eyes on this for now. Let me see, Zoom 5-minute chart. Yeah, that looks really good. That looks really good for Zoom. So just as a signal, right? This is not trading advice or any kind of advice. Zoom is breaking a gigantic a gigantic downtrend. Sorry, got to get this on the other one. So yeah, this is a big downtrend. Zoom is starting to break out of this downtrend. And very bullish signal, right? Especially going into, I don't think they have earnings for a while, but they haven't came out with their earnings with their AI narrative yet. And I think that's going to take them higher once they come out with that. So we're just keeping our eyes on that. SPY starting to get above PDC. Small caps are above Qs. The dollar breakdown is huge. Advanced decline is up. It was positive Friday, Thursday and Friday. I think it was it was negative. Advanced decline was negative Friday and Thursday and Friday. Now it's positive. So there is a lot of positive sentiment going into this week. It's an earnings week. And that, again, like I said, we're going to have to talk about that. So let me pull that up from FactSet, which is how we're looking at earnings. I think this is it right here. All right. So I'm going to go through this while you guys, oh no, this is the older one. This is the older one. Well, this older one was basically showing us the EPS guidance. EPS guidance, issued guidance is starting to upswing for the first time in a while, in a couple of years, which means we may be bottoming in earnings, right? We may be bottoming in earnings. No, let's go to earnings, and then Asia specific. No, we're not looking for that. I didn't know they do economic reports. I got to check that out. I got to see what the reports say. You're on FactSet. Let's go to earnings. Where's your earnings stuff at? That's what I'm looking for. There we go. All right, cool. So this came out, what, July 14th? Is this Friday? I think this might have been Friday. Earnings scorecard. Okay. So basically of the companies, and we don't have all the S&P 500 companies reporting yet or issuing guidance, but of the companies who have issued guidance for revenue and for EPS, you have 100% beat on not 100% beat on S&P. 70, what is this? 80% of S&P 500 companies who have issued guidance are issuing a beat, right, higher than estimates on for EPS. And then when it comes to revenue, we're looking at 63%. But the data is not all in yet. We're still missing consumer services, energy, materials, real estate, and utilities. And we're going to get that as we go. But for the most part, right, it looks like we are starting to bottom in earnings. And when that data comes out, the more it comes out, I will send it in the newsletter. I'll send it in the newsletter. We'll send out, hey, look at this, how many companies are beating expectations as we move forward. And that is a huge signal, because companies are, their revenue might decline because growth is coming down, but it's all about, maintaining your margins. It's all about, can you retain earnings, right? And even though producer prices are falling like a rock, which is going to help the margins of some of these companies, not everybody, right? Only the best will survive. Only the best will survive in this environment. And that's what we're going to keep track of here. All right. So basically, yeah, we'll see. We haven't got all the reports yet, but more companies are issuing better guidance. But we just don't have all the companies. So guidance is up. Basically, guidance is up, man. Guidance is up. Expectations are up for earnings, and we already got big banks. Some of the big banks last week, who was at JP Morgan, Wells Fargo, BlackRock, they all blew out earnings, right? They all blew out on their earnings, and that's going to be maybe it's a signal that there's more, there's good stuff to come. Oh, the BRIC stuff. I've been hearing, a lot of people are asking about BRICS. How's that going to move the dollar? Is the dollar going to lose dominance? Is the BRICS companies taking over? I don't think so. Market just seems so choppy lately. You get a little movement at the open and then chop the rest of the day. Yeah, that is true. We've had a lot of Fed speak. I think that might not be the case this week, because I don't think we have the Fed speaking. Vincent, I don't think the Fed is actually speaking this week. Maybe I'm wrong. Let me double check here. I don't think they're speaking. Usually when the Fed speaks, there is a lot of chop. Oh no, there is some Fed speak. What was it that I read then? Because you got Fed Barr and Gibson tomorrow. And then you have, let's see, maybe there's just less. Maybe I misread that then. It's not a blackout period, huh? Well, there's not a whole lot. Anyways, we have a lot of manufacturing stuff this week too. And I'm trying to keep my eye on the global economy. It's a lot of data here. I'm trying to keep my eye on the global economy to see if it is starting to recover, because if that is the case, you know, the big signal is central banks will start printing again, right? Central banks start to print, to put it quite simply, or the government spends. You get more government spend, and that's going to reinflate the growth picture. And like I said before, we do have the biggest interest payments for the government that we've seen ever, and that is going to drain growth. So they have to monetize that debt to some degree at some point. And I expect the Fed's balance sheet to bottom out somewhere. Maybe I'm wrong. Maybe the balance sheet doesn't bottom out. Maybe you know, the White House just keeps spending, creating more fiscal stimulus. It's coming from somewhere. The stimulus is going to come from somewhere. At some point, we're going to get that fiscal stimulus. So wheat prices jump after Russia halts Ukraine grain deal. That could be an issue right there. That could be an issue if it proliferates. I don't know if it's going to really proliferate. It might just be something, you know, small. Food inflation, terrible, right? Record high youth unemployment in China. Yeah, China's having an issue with growth right now. And we'll see how that actually plays out. Ripple says US banks will want to use XRP cryptocurrency after partial victory in SEC. How many people are bullish on Ripple or XRP? AI is a bubble? I don't think so. Well, I want to check out those what was it? The news on the inflows for crypto, because we are seeing those crypto inflows. So a lot of crypto products are starting to see big inflows, the biggest inflows we've seen since 2021. And yeah, I think that the bull market is back. The bull market in crypto is back, at least. Let's see. Well, that's weird. I think that's we might actually be seeing a. Oh, that's weird. All right, so digital asset investment products experienced 137 million in inflows over the past week, bringing the total inflows over the past 4 weeks, with some adjustments made previously. Blah blah blah. Okay, 720. This marks the most substantial run of inflows since the final quarter of 2021, according to European digital asset manager firm CoinShares on their weekly report. Furthermore, trading volumes on crypto investment products continue to surpass the yearly average. So we're starting to get trading volumes pick up and inflows start to pick up for crypto products in general. And yeah, people are taking risk. The risk curve is starting to pick up. And this isn't even, you know, yields are still elevated, really. So it's still, the cost of capital is very expensive. When it starts to cheapen, then that's really going to start causing margin to come in, because margin is very expensive with these high rates. Bitcoin, Ethereum rise on inflation ease to 4%. Yeah, that was last week. ProShares Bitcoin ETF, first time. Okay, so that's what it is. Some of these ETFs, these 3x leverage ETFs, are starting to see a lot of inflows. We saw MicroStrategy also pick up. Coin, who else was it? Mara, Riot, all these little crypto companies have been making a big upside moves. I think they're a little ahead of schedule though, right? Bitcoin hasn't broken out of the 32K level, so they're a little ahead of schedule, I would say, at least. think they're a little ahead of schedule, but they've moved a lot of interest coming into the space following the ETF hype. Some people call it hype. Well, hey, the S&P did pull into VWAP this morning. Whoever was looking at that, we did pull into VWAP and supported, made a nice move higher. So that wasn't bad. That was a pretty good trade. Looks like it's doing the same thing again. Now, looking at the levels for the S&P 500, we still have a couple levels to get above here. 451, I guess you could say is that a next resistance. But you know, you see the nice falling wedge there in the pre-market. I don't know if you want to count pre-market, but it doesn't look bad. All right, now Tesla is selling off. Tesla is starting to sell off. And the big question is, what are their earnings going to look like, right? What are Tesla earnings going to look like? I think Zoom is really setting up though. Zoom is really setting up. IWM, right? Small caps. Russell 2000 looks really good right now. I'll put it on the left-hand side. IWM. So if you are looking for a trade, that's a sharp move away from price, right? Big sharp move away from price. Now consolidating at these highs. Yeah, that's a nice little pattern right there. We'll see if it pushes higher. IWM's been pretty strong lately. Very strong lately. Very strong for IWM. Let's see. What are we looking at here? So what are analysts saying about Tesla, Nvidia? I want to hear. We'll go through some of the upgrades, downgrades on the big stocks. AT&T, I'm not too worried about. Oh, Chewy. I know Chewy's had a lot of upgrades. There goes IWM, by the way. Goldman Sachs, if you're not familiar with Chewy, ticker symbol CHWI. See. Wonder if it actually... Oh, it had a big sell-off this morning. Interesting. In the morning, it got an upgrade and it sold off. Maybe it was in the news. This is pet food, by the way. Chewy's a pet food company that it seems potential for continued positive net sales growth. Oh, you know what? Chewy is now reaching into Canada. Chewy is going into Canada. And I don't know if I could say this, but my aunt actually works for Chewy. So she told me all the insider information. No, I'm just kidding. She'd be pissed if I really released it. But yeah, Chewy is starting to open up operations. That was on their earnings call. Open up in Canada. So Chewy's going to have some big growth over the years. I don't know what let's see what that big turn, what the big trend looks like, right? So Chewy hit 120 at some point. That's a lot of growth right there. If Chewy can get above, actually, if it holds this level, right? 36, 35, I'd say 36. If it can hold 36 and sort of break out of this the short-term descending triangle or flag pattern, we could see Chewy get back to the highs at 50 and then eventually get back to what, $100 a share at some point. So Chewy, I'd keep that on your radar for a swing trade. It looks pretty solid, especially with their prospects, their growth prospects. They're expanding in Canada. They're probably going to keep expanding. They might have the best dog food on the market. I've never tried it because I'm not a dog. But hey, dogs love it. Dogs love it. All right, so Goldman Sachs also upgrades Yelp. Don't care. I haven't looked at that stock for a long time. What is Yelp looking like? Let's see what Yelp looks like. I haven't seen this. Yelp. Wow. Wow, Yelp, big gap up. Looks like Yelp wants to break out. What, dude? Who trades this? Who messes with Yelp? That is so weird. Yelp, Yelp, Yelp. I guess there's a big market for. Actually, this thing's been consolidating for a long time. I knew it. I was gonna say, there's no way. So Yelp used to be at 101. Can Yelp break out after this upgrade? Does look like it is moving up pretty fast. Hey, IWM, breakout on IWM there. If you're able to catch that. IWM's had so much strength lately. All right, so that is Yelp. Let's go back to that weekly chart really quick. I'm gonna go to the max. Hey, Yelp. I mean, there's a lot of plays that can go up. We're just kind of looking at, okay, are the upgrades gonna take these stocks higher? Is there a technical breakout? These are catalysts, right? The upgrades from the banks are gonna be small little catalysts other than earnings. So you get a catalyst, you get a breakout, and you get all that good stuff. Citi opens a positive catalyst. Watch Bank of America. Don't care. Nvidia. Here we go. Citi raised its price target on the stock to, holy smokes, Nvidia to 520. Citi just raised its price target on Nvidia to 520 per share. Attractive risk to reward. It is the top artificial intelligence beneficiary because it is the picks and shovels, right? We continue to see, and I'm gonna I'll put Nvidia up there. Nvidia is just breaking out. Nvidia is just continues to break out. I'm waiting for that carry trade from AMD because I believe AMD is not nearly, it's not as quality as Nvidia as a company. Well, it does have quality. It's just not, it's not as good as the Nvidia chips. But Nvidia is it's already $1 trillion company. I expect some of those flows to go into AMD at some point. And they did try to go into AMD for a while. So once Nvidia slows down, as a trade, I'm expecting AMD to actually bid up. Still waiting for AMD to bottom though. It's been bottoming around 110. Looks like it's actually starting to bottom right now. At least for the intraday. It's getting above VWAP. Could be an ad there. We'll see. So yeah, Nvidia upgrade to 520. What is that? 50 points from here. About 50 points from here. That's a big move. There goes IWM. Okay. You're not worried about the lead cable issues for VZ? Are you talking about for Verizon, Doug? I haven't talked about Verizon. If you're talking about Verizon stock, I haven't even mentioned Verizon stock yet. Maybe there is some worry about the cable issues for Verizon. I really don't know, Doug. I haven't looked at Verizon, to be honest with you. Is it a signal for just the stock or for the overall economy? Kind of like UPS, right? UPS going on strike, which I don't think is really going to happen. That could slow down the supply chains, right? But I guarantee you there's already companies, in case this happens, they're waiting in the backdrop saying, okay, we'll pick up that supply chain. So I don't think the market's too worried about it. But Verizon affects T-Mobile and Verizon. Okay, maybe short T-Mobile and Verizon. Maybe you short it. I really don't know. I haven't looked into that story. So much data out there. But if there is some issues, that is telecom used lead cables. Okay, yeah, back in the day. Okay. Yeah, maybe that's a catalyst. I'm not too into those stocks because they don't move much. I don't like the price action, so I wouldn't mess with them. That's just my flow. But hey, if you have a catalyst, then maybe that works. The question is, who else is going to do the cables, right? I don't know if that really moves the stock much. Who else is going to move those cables? Oh, Ed Yardeni sees S&P 500 rising to a record high for 5,400 within the next 18 months. Oh, dang. Okay, we're going to have to definitely go over that. All right, so anyways, Nvidia upgraded by Citibank to 520 going into earnings. Netflix is price target raised by Deutsche Bank to 475 from 410. Bullish heading into the earnings this week. Hey, people are getting bullish on earnings. I think this is the bottom of earnings, right? Either way, like, earnings are negative, but the market looks 12 months ahead and it's looking into better earnings, or at least the bottom. And especially with all this fiscal policy and the Fed at the end of the rate hiking cycle, inflation is collapsing. We know that. We've seen the data. So this is it. Wave 2 FOMO. I think we're here. And you see all these upgrades happening on even big tech. The ones have already ran a lot. Goldman Sachs adds Baidu to the conviction buy list. Great. Baidu as an AI play from China. Those actually might be good plays because you're going to get the Chinese economy start to stimulate, or the central banks, the PBOC, the Public Bank of China. Oh, I almost said the wrong word. The Public Bank of China should be start printing pretty soon to get their growth back up. Dimaj says Nvidia struggling to reach the key level of 461.50. It could be a good entry level, either to break out or get rejected. Okay, fair enough. What is that? 461. Okay, yeah, that was like the pre-market high, right? I'm looking at Nvidia here on the left-hand side. Man, Nvidia is so strong. It kind of looks like Apple. They're just Nvidia and Apple. Who's the next mega cap that can move like this, right? Who can break to all-time highs? We already have two mega caps. We have Nvidia, we have Apple. Is Microsoft at all-time highs? I think they're pressing all-time highs. They're close to it. I think after this Tesla earnings report, we're going to make our way to all-time highs if we get that margin guidance higher. If we do get the better than expected revenue, this might be the most outsized. A lot of people are expecting negative results on Tesla, and I think that earnings report could take us much higher. Maybe I'm wrong. Maybe we go back down, but the narrative is still too strong with the overall market breaking out. So yeah, Nvidia does look straight, bro. I like that. You got a lot of support. You got a lot of resistance here at a 460. I would say the resistance is somewhere between 461 to like 465 for Nvidia. Okay, not bad. All right, let's go to Wells Fargo. Here's what I want to see. This is what I want to see. Wells Fargo said it's cautious heading into Tesla earnings later this week, but raised. Everybody's cautious because it's up so much. Right? It's kind of feels nervous. It doesn't feel right, but that's what Tesla does. It explodes because the expectations of the revenue are just, if they swallow Ford, GM, Toyota. When I say swallow, I mean they're going to They're going to basically take a lot of that market share and revenue from these other big auto companies, and they're doing more than just auto. They're changing the game. And those expectations, some people hate it. They really hate it. They don't like it. They're so against Tesla, but that makes for a better story, because when they're wrong, when progress is made, the price action gets much more volatile to the upside. A lot of those shorts get squeezed and people get excited, right? I saw somebody said there was some, I'm gonna have to look at my messages, but there's a lot of big buying happening, dark pool buying for Tesla. So maybe somebody knows something. I wouldn't go off that though. That's kind of silly. Anyways, the company beat Q2 delivery volume consensus. However, we forecast auto gross margins to fall. Wow. Now, if the margins do fall, that's going to be negative for Tesla. Okay. Auto gross margins falls to 17.5% due to continued price cuts and weaker mix. We raise our price target to 265, but remain equal weight. Okay, so they're equal weight. Wells Fargo is raising their price target but remaining equal weight. So margins are going to be important, man. If they come out and say, our margins are still going to be suppressed, which they could be. They just started cutting prices on the vehicle. So Tesla could have weak margins for a while, right? For maybe another quarter. But the question is, what about the revenue growth? Are we getting more market share? Is revenue starting to pick up? They still have the best revenue growth in the auto industry. And more than that, you got Tesla Dojo coming up. What are they going to do with their supercharger network? What are they going to do with their, how far is full self-driving? And so there's a lot more catalyst than just earnings, but that is going to be big. Is the guidance higher, right? Especially with China too. So it could be, we don't really know. I'm not saying, hey, earnings are going to be great. They could be. We'll see. There's a lot to look at when it comes to Tesla earnings. All right. So Morgan Stanley reiterates Apple as overweight, raised price target to 220 from 190. India is the next frontier. Wow. We estimate India can grow 7x over the next 10 years. Wow, that is big. India is the fastest growing population right now in the world now. So anybody who can capture India is going to be, I think is Tesla growing I think Tesla is planning on a factory in India factory. They might be. So anyways, yeah, capturing India is going to be important. They have like no debt, and their average population age is like 32 years old, like my age, getting old. But for the most part, yeah, India is going to be huge. So Apple's going after India, and Morgan Stanley is upgrading Apple as an overweight as it, gets into that Indian market. All right, what else we got here? PepsiCo downgraded, don't care. Barclay, we're looking at big tech here. Progressive to overweight, don't care. Okay, Chipotle, you guys like those burritos? Somebody said, "Oh, I'm still paying $14 for my Chipotle burrito." Yeah, and you're still going there because Chipotle has what we call pricing power. Pricing power, right? Chipotle has pricing power. You love Chipotle, so they can increase their prices, and you're still going to go to Chipotle. Maybe you only go, 5 days a week maybe you only go 3 days instead of 4 days, but you're still going to go to Chipotle. And people get pissed about the inflation backdrop, but hey, it is what it is. Like, you can't change how the economy works. You're going to get inflation no matter what. People are pissed off online saying, "Oh, inflation is so bad. How dare you say inflation's coming down? My prices of my burrito are still elevated." Inflation is always existent, bro. It always exists. Inflation is the rate of change of your prices. It is not the absolute price. The absolute price will always go up because inflation is always an existing phenomenon. In order to get GDP growth up, you need 2.5% inflation and you need more productivity. So prices will always climb, guys. Keep that in mind. Prices are always going to go up. Not in every item, not in every service, right? The ones who can produce more at a cheaper price, they're going to go down, or they can stay level, but prices over time, 5-10 years, they're going to go up. The question is, how fast do they go up? And we don't want prices to climb at a faster than expected pace. So yes, your Chipotle burrito is going to be more expensive, but the real question is it going to stop from here? Are your wages climbing also? So who cares? Like, it doesn't matter. That's why I say invest in asset prices, right? Because assets inflate more than the prices of the inside the economy. So you want to store your wealth, right? Not financial advice. I want to store my wealth in the best assets that are going to climb faster than inflation. That's how you beat the system. That's how you beat the system. Your wages will never outpace inflation. They're just not going to do it. So, I mean, they can for a little, a small period of time, but more than likely, you're going to spend more money as you get more money. So you want to store your wealth in assets. I want to store my wealth in assets that can beat the rate of inflation. Anyway, so Chipotle upgraded, but after refreshing, blah, blah, blah. What is this? Near-term, long-term earnings power. Yeah, Chipotle is a very strong brand. People love it. But I do have something to say about Chipotle that some of you guys are not going to like. I do a health channel, right? We do fitness, and we focus on, so Chipotle has some of the best fresh ingredients. Don't get me wrong. Oh shoot, let me take this off. They have some of the best fresh ingredients, but they do cook in oils like vegetable oils or canola oils. So maybe it's not that, but they don't cook in the best oil. Best oil is avocado oil because it has a high, it doesn't turn toxic, and it has a high heat cooking rate, right? Where olive oil, if you get olive oil too hot, it becomes toxic. So you got to be careful there. Oh, cool. We got a bear in the chat? This is not a bull market. Great. I was waiting for this. Khalifa. We'll definitely, I love the bears. Makes for better commentary and better content. So let me read. Don't run away too quick. Khalif, I see you in there. This is not a bull market. Just because S&P at 4,500 does not mean bull market. The Fed is still hiking rates, and QT, not bull market conditions. Annoying to watch. Okay. Well, technically we are in a bull market. Khalif, I'm just going to call you Khalif. We're technically in a bull market. We're above all the moving averages on the daily, on the weekly chart. So we're trending higher on a technical basis. Also, S&P 500 or S&P, any type of stock, when you're down like 20%, that's considered a bear market, right? We're not down. We're no longer down 20% in the market. We're down. What are we down in S&P 500? Let me double check that. There goes AMD. I should be adding to that position. So we are down right now for S&P. Oh, there it is. We're down. Keep this in mind, Khalif. A bear market, by the way, Khalif, is defined by down more than 20%. Okay. So the S&P right now is down from the highs. We're down 6%. So we'd have to get to be back in a technical, right? This is technical. You're pointing out macro with policy, and we'll get to that. But technically, a bear market would have to be under 3,800. About 3,800 would put us back into the bear market. So we're well above that on a technical basis. We're above the moving averages. We're trending higher. As a matter of fact, we broke the uptrend to the upside. So we're elevated, right? We might need to consolidate here for a while, but technically we are in a bull market. All right, so going to your macro concerns, the Fed is still hiking. Okay, well, guess what? If you go check out my research, actually, you know what? I'm gonna throw this up on YouTube because let me throw this up here. I have this chart saved because I know a lot of people say, well, the Fed is still hiking. That doesn't mean you're in a bear market. The Fed is tightening conditions to defeat to get inflation under control. So where is my chart at? I love the bear market. Man, the bears will fight you till we're at all-time highs and they'll still say we're in a bear market. Hey, and if you want to go live, DM me. I'll send you a StreamYard invite, and we can go live on YouTube and we can debate it if you're interested. A lot of people will say things, but they don't like it. Dang it, where's my chart? Anyways, it's in one of my in my newsletters. I'm gonna find it. It's basically showing how the Nasdaq from 2017, Khalif, from 2017, the Nasdaq, and I'll pull it up here. The Nasdaq went up 25% when the Fed was hiking rates and pulling money off the balance sheet. So they're draining liquidity and they were hiking rates, and the Nasdaq still went up 25%. And that primarily is because the markets can still run up during a hiking cycle. They can still go higher, right? And we're coming out of the bear market right now because of fiscal policy. So what you're missing, Khalif, is the fact that we're not really in QT overall because the Fed just printed 450 billion to backstop the bank. So they actually started to give back money, right? That's not full QT. Also, Biden is printing lots of money, $1.2 trillion infrastructure bill, CHIPS Act, $280 billion. Maybe I get these wrong. Inflation Reduction Act, 300 billion, whatever it is. Now the Internet Initiative, 42 billion. So the government is also spending, which isn't really QE. Now you could say or isn't really QT. You could say, oh, we're still technically in QT. Okay, but there's still money coming in, right? The government is printing money, and the reverse repo facility, which I'm pretty sure you're not familiar with because it's, well, okay, you know what? Maybe you do know what the reverse repo is. The reverse repo facility has $2.5 trillion. That's at the Fed. It is now draining back into capital markets, which gives us a bump. So that capital from the reverse repo is now supporting the Treasury general account, the Treasury account. By creating the Treasury is creating short-term bills that actually yield more interest to your account than the money market funds. So that money market fund money is leaving the reverse repo. This is very technical, but maybe you do know what I'm talking about. And it's going into to the Treasury general account. So that liquidity is not leaving the stock market or the crypto market. The liquidity is actually supporting the markets, right, from the reverse repo. So fiscal liquidity, money market fund liquidity, or reverse repo facility liquidity. And then if the Fed already pumped the balance sheet or pumped the kind of reversed a little bit. Plus we're at pause, right? So we're at the end of the cycle. At the end of the day, we're at the end of the hiking cycle, I would say. What do you have to say about that? Did you leave? He must have left the chat. I had a guy cuss me out yesterday on TikTok. He was just cussing me out, saying about inflation. He was so pissed that I said inflation's coming down. It was hilarious. I told him, I said, hey, well, come teach me. And he was, just kept cussing me out. I was like, well, teach me what you know, or come on, let's go live and let's debate it. So people like to talk, and I'm not saying Khalif is just talking. He's probably really doesn't understand how the macro actually works, because people just hear QT, the Fed's hiking, bear market. That's not a bear market. You could be at all-time highs, the market's still going up, and you're going to call that a bear market? A bear market is minus 20%. What are you talking about? A bear market is below negative 20%, or you could say we're heading into a bear market, but I'd argue we just left the bear market, right? We just left the bear market on a technical basis. So I welcome the bears to come on and to challenge. Anyways, I want to go to this Ed Yardeni piece. Okay, while we're on here, let's check this Ed Yardeni piece before we get started, though. Get a little bit of coffee. Market veteran Ed Yardeni. All right, let me change the charts that we're looking at here on YouTube. You got IWM, broke out, starting to support that level, going higher maybe. On the right-hand side, you got NVIDIA supporting PDC. This is a nice entry if you're a trader before we get to the Ed Yardeni piece. Look at that, NVIDIA supporting previous day close, right? That's a second, and it's a higher low also, 454. Hey, I'm not advocating a trade here, but if it can hold that level, that's pretty nice. That's pretty nice. And you have the Qs grinding higher. You got the advanced decline line moving up. You got the S&P also moving up, going to retest those previous highs. The Dow, is the Dow still moving up? The Dow's still moving up. So a lot of market breadth here. And I think because, the Fed doesn't speak, there's a lot of FOMO in the market. Year over year, I'm going to keep saying this over and over. Year over year, margin debt is negative. Year over year, margin debt is negative. Year over year, equity inflows negative, right? We're not even in risk-taking period yet. People haven't started taking risk, and that dollar breakdown is the risk signal. It's a risk-on signal. All right, so to the Ed Yardeni piece. Market veteran Ed Yardeni believes we are already in a new bull market, and the S&P 500 could potentially climb nearly 20% in the next 18 months in the cycle. The head of Yardeni research said the bull run, which started October 12th, 2022, and that's why we say, hey, this is a bull market, because when you pivot right now, maybe, he says it began because that's where we bottomed at, right? Now, if you were smart, right, use common sense here. If you were trying to capitalize on the markets, you want to bottom tick the actually low, right? If you bought in 2008, you don't want to buy at the top when it recovered. You would love to buy the very bottom because that's going to give you the best return. So Ed Yardeni is saying that October 12th, which was the bottom of the S&P 500, and just so happened to be the bottom of global liquidity, right? We always say liquidity runs markets. He's saying that's the S&P bottom, and that was the beginning of the bull market for a lot of reasons here. So he says, anyways, S&P 500 pushing through the equity benchmark to hit a record somewhere between 48. So he says somewhere between 4,800, which is all-time highs, and 5,400 is his next target range, representing about 6.5 to 6.5% to 20%, basically 6.5 to 20% for the S&P 500 as of Friday, which was July 14th. The widely followed strategy said the economy has moved past the slowdown and is now in a rolling recovery. And we pointed that out. The housing market is starting to recover. Consumer savings rates are going up, so they're bracing for a recession. The manufacturing indexes are negative, but looking like they're starting to bottom, while services indexes, the service PMI, are still accelerating, right? Services are still, the service PMI, I don't know how to say this any clearer. The service economy, the leading indicators for services, which are 70% of the economy, are pointing higher, which is why airfares or airlines have a lot of juice. People are traveling. People are still spending. They're also getting that money market fund money, and they're spending it. They're getting their dividend yields, and they're spending it. There's spending happening, and people are still off sides, right? So we're getting a rolling recovery regardless of the recession fears, right? The yield curve, yes, the yield curve was negative, and it signaled something negative. It signaled, hey, we should have a breakdown here. And we did get a breakdown. We got the regional banking crisis, and the Fed stepped in. So that got erased right off the bat, right? Major rejections coming when QQQ hits 384 or 385. You've probably been saying that, Brad Simmons, the whole way up. If you want to come on here and debate, I would love to debate somebody on here. Or just send me a message, and we can do it later. We can do it at some point. But I love to hear the bear market cases. Mostly people are they're not in the market, or they're short, and they're pissed off because they're missing the rally. You're probably missing the rally, right? You missed Tesla at $100 all the way to 285. You probably missed Amazon run up. You probably missed Meta. You probably missed the Bitcoin run up. You probably missed a lot of the run up. So you want to go short, right? You wish it went back down. Hey, maybe I'm wrong, but that's usually the case. It's psychology. It really hurts people when they miss out, right? It's a psychological game. But yeah, if you want to look at the research, go go check out my newsletter, and you can actually comment in there. If you think I'm full of crap, go comment in the newsletter. You can actually comment on there when you sign up. It's free, and you can say, hey, this is bull crap. But either way, yeah, I have all the details. Everything that I'm saying is already written down. It's on the website, and all the charts, all the evidence that you would need are there. Doesn't mean you have to believe it, but it's up to you to decide, right? So anyways, Ed Yardeni says we're in a rolling recovery, softer than expected inflation data. That is true, right? Hey, we're at 9.1% inflation. Now we're at 3%. Okay, on the headline. right? Core is also dropping fast. PPI is also dropping pretty quickly. Anyways, Yardeni praised the central bank for bringing down inflation effectively. The latest reports could give the Federal Reserve some breathing room as it looks to ease inflation, which hit around 9% in annualized basis in June of 2022, the highest since the early 1980s. Wall Street economists and strategists like to be contrary to that and say the Fed is not on the right track, but I think they actually can say mission accomplished. Well, yeah, because if you look at the core inflation month on month, it was at 0.16, 0.17, which is less than 1%. That is the month on month core, right? The core services shelter was very low. So what that means is if you annualize it, we're under 2%. We're at the Fed's target. There's many ways to actually gauge inflation. But when you look at all the ways, more of the inflation indications are pointing to a deflation period more than an inflation period, which is why I think you're more likely to say, hey, the stock market's in trouble from a recession or from a deflationary period, not inflation. Inflation is non-existent. It is evaporating. If you look at all the indicators, it's evaporating. But people really don't see that. They just hear the headlines and they really don't know what they're looking at, what they're reading. All right, so yeah, Ed Yardeni. So what's his main cause? I think his main thing here is that we're in a rolling expansion. The Fed has crushed inflation, and his price target is now 5,400 within the next 18 months. Hey, I don't think that's crazy at all. I think we hit all-time highs this year. I think we're headed for all-time highs this year for S&P 500 and NASDAQ. NASDAQ probably hits that first, and then we'll see how the S&P actually reacts to that. All right, Tesla stock. I think we had that big upside move in the morning, and we could be breaking the downtrend here. I think we're going to break this downtrend pretty soon. That's just FOMO, man. There's a lot of FOMO here going into earnings. I mean, we're hoping we get good earnings, but it may not happen. There's the uptrend that we've been watching for Tesla. It's really just pulling back into the trend. You might want to actually take off the pre-markets though to get a very clear picture on the price action. Honestly, this price action probably isn't going to matter though, because we are headed into earnings. What the heck? Here we go again. There it is. Yeah, so this price action isn't going to be that important because we're headed into earnings, and that is the big catalyst that we are looking at. Okay, AMD starting to recover back to that level. Okay, Zoom finally starting to pull back. I want to see Zoom hold the 72 level. And now you got Roku also trying to break that downtrend. We'll see if it actually happens. What is FOMO? Fear of missing out. FOMO is a fear of missing out. That's what FOMO is. What books do you recommend? Hey, good question. For investing or for trading? If it's trading, I would recommend Mike Bellafiore. Actually, you should read my content. I'm going to have to say that first. Go read my content on trading if you're interested. It's free. It's in the website. Link of the website. Just go to the trading tab and read what I have on trading. At least so you can digest what I think first, or how I look at the markets as far as trading, and then you can move from there. But Mike Bellafiore, he is a prop trader, and he has a book called One Good Trade and another book called The Playbook. I think The Playbook is really fundamental. One Good Trade is more of like how traders got started, their thinking around it, how tough it was. It's one of the toughest jobs you can do full time, and one of the hardest. Most people failed. But The Playbook is actually giving you like a very organized way to approach trading, versus One Good Trade's a little more like insider thought. It's a lot of information. So go check those out. Now for investing, I don't even know if there's a book to recommend for investing. I mean, you can obviously read my research, or you can read my stuff too. I think the most important thing is you got to understand compounded interest. So you understand the opportunity, compounding interest. And once you understand that, then you can now, there's a lot to it, bro. There's actually a lot to it. So I would say just read the stuff I have on investing. Go through all my older stuff for investing that I've written over the past 3 years on the website. It's all free. If you have questions, I'm literally here. You can literally come ask me the questions if you're interested, if something needs to be cleared up. I used to work with 401ks, but new to day trading. Okay. 401ks. Yeah, day trading is tough. I'm going to tell you right now, it's harder than most people say it is. It's hard. You're not going to be that successful off the bat. It takes years to really be good and consistent, right? Some people will make money in the bull market when things just go up, but they don't know how to short or gauge their risk, or they, you know, or the volatility disappear. There's just so many things that can go wrong. So trading is hard. It's really tough. Investing is easy, right? I mean, I don't want to say it's the easiest to, investing is not hard as far as you just push a button, right? You just got to push the button at the right time. You got to be in the right vehicle. You got to have your time horizon. How far are you looking out? So it's less technical. It's a lot easier compared to trading, but you still have to pick the right vehicle also at the same time. I know there's a lot of concerns about BRICS too, so that's going to be interesting to see how that plays out. I need to find that actual where is it? The segment on BRICS. We'll look into that. Let's see what we got here. You worked for Fidelity Investor for 6 years, but never went over to the retail side of the business. Interesting. Just FYI, charts on Bluetooth, just so you know. That's what we're looking like here on Bluetooth. When I get back, I'm gonna read this. This came out, I think it was actually a while back, but it is kind of interesting. It is the BRICS. I'm getting a lot of questions about BRICS and is the dollar gonna lose value and blah blah blah. So we're gonna talk about that in a second. Take a quick commercial break and we'll be back. We're gonna talk about BRICS versus the US dollar, because everybody's worried that, you know, the dollar is going to collapse and should I buy other currencies? That is silliness, man. The stock market has way better value than other currencies. I'll be right back. Give me 30 seconds. All right, here we go. So if you're familiar with the SWIFT system, the SWIFT, SWIFT is the messaging system between central banks, right? The U.S. central bank, other central banks, international, and the International Monetary Fund, the what is the BIS? Basically the central banks of the world, the big central banks use SWIFT, the SWIFT network, to communicate. So what the BRICS is about, BRICS is trying to create a new messaging system. Why? So they can get away from US sanctions, because the US can sanction you, destroy your economy instantly. That's what the dollar is. The dollar is really a weapon, right? The US doesn't really import. We don't do a whole lot of importing. We actually don't. The US doesn't actually export a whole lot of things. We mostly import, right? We're always consuming. But the one thing we do export is US dollars. because everybody wants to use the US dollar as a currency. If you're a business in another country, you want US dollars. You don't want that country's currency most of the time because it's unstable. They can default, and the dollar is just a lot more stable. Looks like Tesla is starting to break out here. Actually dive back into the daily chart. So BRICS is trying to create a messaging system outside the US's control, so they're not, held hostage by the US dollar for trade. And that's actually kind of smart, right? You don't want to be held hostage by the US. So who's involved with BRICS here? Who's actually involved here with the BRIC nations? All right, let's see. Yeah, it looks like Tesla is starting to pull up here, breaking that downtrend. We'll see if it can get above that previous level. You have IWM on the left-hand side. ZM, I'm going to keep my eye on ZM. Maybe look for that hold of VWAP. We're finally above resistance on ZM. Finally above resistance. Roku's getting rejected. That's not holding up. All right. So yeah, so BRICS, what are BRICS are trying to do? So their messaging system is called the ACU, which is the Asian Clearing Union. Or at least they're trying to use it. And really, SWIFT is like the nervous system. It's basically the nervous system. So if you think of the global trade or the global financial system, how other central, there's central banks. There's not just the Fed. You have central banks in every country, and they all communicate with each other for global trade and commerce and whatever else you want to call it. Currency swaps, Forex, blah, blah, blah. So SWIFT has basically been the nervous system for the financial system, and they want to get off that nervous system. They want to use their own nervous system, the ACU, right? And this is BRICS. This is where BRICS want to go. And when you think about BRICS, who's that going to be? It's probably going to be India, Pakistan, a lot of the Middle East, India, Pakistan, Iran, Bangladesh, Myanmar, Maldives, Nepal, Sri Lanka, can't even say it. And Russia too. Because Russia got sanctioned, right? So they want to get away from the U.S. hegemony, as people say, the powerhouse. The broad de-dollarization trend is the inevitable result of the U.S. government knee-jerk use of economic warfare to punish countries that resist its agenda. And that's what it comes down to. We have an agenda, and we can punish them by cutting off their dollars, which they're not able to buy oil or sell it to other countries, and they want to leave that. So, China and France total trading liquid. What? Okay, so China and France, okay, trading liquid natural gas in yuan. So they're already trying to leave the SWIFT network. They're trading natural gas in yuan versus trading in dollars. Russia and China using the ruble or the yuan for more than 70% of their trade. India and Russia trading oil in rupees. Here's the hard part though. Do you think China really wants to hold the ruble, the Russian ruble? Right? Heck no. So right away, that's where this is where BRICS kind of hits a wall, is that people still don't want to hold those currencies. They're gonna have to go buy assets at some point, or convert it back into their currency as fast as possible. India and Russia trading oil in rupees. Okay, Brazil and Latin America, China's join China's SWIFT alternative cross-border international. Oh, okay, CIPS. I didn't know they had that. So China has cross-border interbank payment system. I think Chainlink is going to have to be in all these systems also as we head to stable coins, because they're faster, cheaper. They settle instantly, and they have cheaper fees. Stable coins. 19 countries applying for BRICS as the geopolitical rival of the G7 that originally comprised of Brazil, Russia, India, China, and South Africa. Okay. So I don't know, maybe you guys don't have questions about it, but a lot of people are asking about BRICS. Is it going to collapse the dollar? Most global trade is in dollars, and most debt is denominated in dollars. So the dollar isn't really going anywhere anytime soon. The only way the dollar gets devalued is when the Fed prints more, and we just haven't seen that lately. Now talk about the dollar. AMD hitting that 116 level. There it goes. I want to see it hold that level. So talk about the dollar though. People think the dollar is going to collapse, right? But talk about the dollar. Ooh, we're getting some support here on ZM. Ooh, Tesla breaking out of that downtrend. The dollar is actually breaking down. This is really good for risk assets, right? The dollar breakdown is good for risk assets, actually, more than anything. User 33A, thanks for joining. Appreciate it, man. We're on Bluetooth. Like I said, I can't say it on TikTok because they try to shadow ban you. Worked for Fidelity for investors for 6 years, but never went over the retail side. Amazing company to work with. Hey, I like Fidelity. I do charts. I use what's his name? Jurian Timmer. You know Jurian Timmer, right? He's the macro strategist for Fidelity. I always look at his research. People say I'm not an expert. I'm not. I just take all the experts and I simplify the information. I learn as much as I can. And Jurian Timmer is one of those guys. I think he's a smart dude. I think he has a lot of good information. And he produces so many charts. Some of them I can't understand, but the ones I do, I try to push them out. And the latest charts have showed that positioning is offsides, which is year on year, margin debt is still negative. And year on year, equity inflows are still negative, which basically is a positive if you're looking at the upside, because it means people haven't even really bought into the market, which means FOMO, fear of missing out, hasn't really started. Morning, how's your morning? How you doing, Slime Z? Shout out to you, D Maj, Manny. How you guys doing this morning? I'm good, man. I'm good. Just waiting. We got Tesla earnings this week. We got the dollar breaking down. It's earnings, right? The earnings catalyst is here. The earnings catalyst is here. Yeah, you're welcome too, user. Now you're a respiratory therapist. The stress was too high. That's crazy. A lot of stress, huh? Yeah, you probably weren't able to exercise. Make sure you get that. If you're not able to exercise, that creates a lot of stress, because that's how you relieve your stress a lot of times, is exercise. All right, the Qs are making a move here. We got the Qs making a move. Big move on the Qs. And I know I was talking about the dollar breaking down. When I do see a move, though, I always like to look at it. And ARK. Okay, ARK is now consolidating at those highs. I'm sure Tesla pushed ARK higher too. I'm still keeping my eye on Teladoc. Crazy good options, but the company might tank if it doesn't, continue. ZM now above that trend. ZM is starting to push. Oh my goodness, Palantir. I didn't even see that. Palantir breaking above 17 again. Nice. All right, here goes Tesla. Tesla looks like it's going to start breaking out too. So going back to the dollar, the US dollar, man, this consolidation, we haven't even started printing and the dollar's already, starting to roll over. So we're still in QE. I'm sorry, we're still in QT technically from the Fed, and dollar starting to roll over. Although the dollar did have a big dump back when the regional banks actually crashed, because they created the emergency lending facility, which is the BTFP by the Fed pivot bank term funding program. It was an emergency lending facility, which means you have to create more dollars, which means you debase the currency and the value of the dollar goes lower. And that's when markets actually bounced. That's when S&P was around 3,800. We were near a bear market when the regional bank crisis happened. And we started to, that's where we bounced. That's crazy. The funny thing is, when banks failed, keep this in mind, when banks actually failed, when we actually did get banking risk, that actually was the bounce, right? That was the start of the bull market, which is hilarious. People don't get it. It's so backwards, right? For their thinking, they don't understand it, because the Fed released the liquidity into the market, bro. Right? For you bears out there, the Fed released liquidity into the market. That's why we bounced. That's exactly why we had that bounce. All right, let's see what else do we got. Emergency. Russia tells. Oh, nope. Fear and greed for crypto is now going a little towards greed. Yeah, a lot of people are taking inflows, or not taking inflows. A lot of people are going after, are bidding into the crypto market again. So here's here on the right side, we're looking at the Qs. Qs starting to break out, and this is wave 2 FOMO. This is wave 2 FOMO. We broke wave 1 FOMO. We consolidated, and now we're breaking higher. We're moving higher. We already broke that resistance. We're already above that resistance. So we're headed for that 382. This is wave 2 FOMO. It is now all going to be up to the earnings catalysts, right? How bad are earnings going to be? As a matter of fact, what do we have today? I know we have some earnings today. We had big bank earnings this weekend. I mean, this past week, we had JP Morgan. They all beat too. All the banks beat expectations. Their revenues didn't all climb or meet expectations, but the EPS did, because they're shedding jobs. If you see every week, we're seeing, if you look every week, a lot of the banks are cutting, are cost cutting, right? They're cutting jobs, and people can go find jobs somewhere else, but they're cutting jobs, and that retains earnings. Knows. So let's see, today we didn't really have any earnings today, but tomorrow we do have Bank of America, Morgan Stanley, Lockheed Martin. They're probably going to do pretty good because of all the defense spending. Charles Schwab, PNC, International Broker. Bank of New York Mellon. Hey, they're using Chainlink, by the way. They're working with Chainlink. And then Wednesday is the big tech, right? Wednesday we kick off with Tesla. Is this going to be morning? Oh, this is PM. We got Tesla PM, Netflix PM, Goldman Sachs in the morning, US Bank Corp. I think those are the big movers right there for Wednesday. So all about Tesla and Netflix. All about Tesla and Netflix. We'll see how that turns out. So again, on a fundamental basis, the S&P is reporting the largest year-on-year decline in earnings since Q2 of 2020, right? So since the pandemic, this is the lowest earnings. Dang, AMD is exploding. This is the lowest earnings expectation since Q2 of 2020. So what that means is, well, Q2 was the bottom, right, of 2020. That was the bottom. That's when the market exploded after Q2 earnings were negative, because that was it. That was the bottom. And that's what I'm saying here is, hey, this is the bottom. This is the biggest decline in earnings expectations is this quarter. So as long as companies come out and start beating, you're basically revising growth higher. You're revising these a little higher than usual. Who wrote the playbook? Mike Bellafiore. Mike Bellafiore. He's a prop trader. That's where I learned a lot of my trading from. Really mindset, that really a lot of mindset stuff there. How to keep a growth mindset, how to look at your mistakes as opportunities to improve, right? Always trying to get better each day, because trading hurts. That's probably one of the most mentally, when you lose money, it's one of the most mentally exhaustive things, emotional things, is to lose money over and over and over. It's very mentally taxing. You could take the safe way and just get a safe job, which is nothing's wrong with that. But everybody wants to take different approaches to life. Entrepreneurs, everybody, people who built all the all the apps on your phone, they didn't take the safe route. They took the risky route. Most of the stuff built in America was not built off safety, right? It was built off of taking risk. So if it's in you, if it's in your blood, it's in your blood. If it's not, it's not. But there's a lot of different ways to trade too. Shares, options. Now they have those trading bots, those AI trading bots, which I don't know if I'd trust that. S&P is headed for Friday's highs too. So we're starting to bid up now. All right, so what is going on with Russia? I want to see. I'm going to read through this article really quick. Man, this is a long article. because if this is I want to see if this is inflationary, which is the Russian attacks. I'm sorry, the wheat prices jumping from the Black Sea grain deal, right? So it looks like Russia seized operations belonging to the French food manufacturer Danone and Danish brewer Carlsberg in the country, and warned of more seizures of Western assets in retaliation to Moscow for the treatment of Russian companies in the West. So they're just seizing assets or seizing companies, which slows down trade. Does this really affect the supply chains and overall the market? A lot of drones, man. That's a lot of drones over there in Russia. Ukraine's second largest city overnight and loud explosion. Okay, so I just want to get to the food part. I think if anything, some of these companies will just stop sending their supply chain through that route, so it will slow things down, but they're not just going to keep getting seized. They're just going to stop doing it. I don't want to read all the war stuff. I just want to get to the supply chains. Okay, so wheat prices jumped 3.5% as the news broke of Russia's termination of the Black Sea Grain Initiative. So they're breaking their agreement to allow basic food grain to pass through whatever passage it is. And that's going to disrupt some supply chains. I don't know if it's really if it's going to be a global thing. I mean, this war is going to go on for a while. The grain pact allowed the export of commercial food and fertilizer supplies, including ammonia, and through the Black Sea, from 3 Ukrainian ports to the Black Sea. Okay, so they say it's pivotal to the global food supply. Maybe it is. You were swinging from Friday, huh? Who's this? User 335. Man, you guys got to get some names in here so I know so I can call you guys, so I can identify you guys. It's tough because I'm like user 255333682, right? It's hard to identify you guys. But I'm reading the Russian grain deal. We have 2 risks right now on the table. I don't know if they're really that important. They're all supply chain risks, which are inflationary, right? The real inflation so far is not there. Dang it, AMD is going higher. I missed that entry. I missed the ad. That's okay because I do have an opportunity to add on ZM here. That's what I'm really looking at. Should I add on this Zoom, who hasn't really moved? They're breaking the downtrend. I'm going to be patient. I want to see Zoom come back and support 72. And also I need to be patient for AMD to come back and show support, because it's been making big moves to the upside and then just getting crushed. And I need to catch it on the downside. On a higher low, also not a new low, a higher low, so it can gap up the next day. So yeah, the 2 big risks right now are UPS. The UPS, let me see, UPS workers, if they do not sign the deal with the what is it called, not the workers, but the union, right? If the union doesn't sign a deal with UPS in general, then you get a strike. I don't know if people are really not going to work, because my cousin works for UPS and he says he's still going to go to work either way. And what that does is slows down the supply chain, right? The delivery of services, of goods. And that's going to be somewhat inflationary. The question is, how long does it last? How deep is it? And do we have a backup plan for that? Does the US have a backup plan? Because this isn't a surprise. Everybody knows it's coming, right? So there could be a backup plan. FedEx takes on some of that supply, XYZ. Also, this Black Sea grain deal, is this going to be more inflationary because the halt? I don't know. So I'm just trying to read through it, see if they're just pumping it up here. Maybe they just need a deal. Okay, so I guess that's it. These are just a couple food companies. Donaha, don't know how to pronounce that. So this is just France, right? This is a French and a Danish food. Is food the right word? How do you say? I guess you just call it food, whatever it is. Grain, anything that has to do with grain, or which also includes beer. Very interesting. So it doesn't seem that urgent, right? It doesn't look like it's that urgent. Plus, the market would be responding negative if it was that negative. We got the S&P, you got the Qs look at breaking out to that next level. Tesla broke that downtrend. AMD's breaking out. Looks like Zoom is starting to hold a little bit here. Check out AMD. Yeah, there was AMD. Good thing I didn't add on there. I just waited, pulled back. See if we could hold this level. We got to hold the 116, 117 level. I want to see some support on that. I got smashed on AMD puts this morning. I was up and then it dipped. It dipped to 12. Yeah, what was your time horizon? Were you looking short-term trade, or your time horizon really does matter? All right, what else are we seeing here? That was a big move from AMD. Let's look at ZM here. Now it looks like ZM's starting to hold that level. Previous high. And part of this big trade in ZM is like, hey, it is part of the ARK index, the innovation index, right? You got S&P 500 companies index, ETF. You got NASDAQ, which is the proxy for technology. You got the Dow value stocks. You got the IWM, which is the Russell small cap ETF. Now, ARK is supposed to be the innovation ETF for disruptive innovation. So if Tesla pushes ARK higher, then ARK goes higher, and then ARK carries ZM higher. And if it gets its catalyst, it goes higher. So that's kind of the player. Even if the S&P goes up or Qs go up, Tesla still goes higher. It carries ARK higher. So this is all connected. And that's the type of thinking I do. I think, also it's a big setup. It's a really big technical setup that I'm looking at. Big technical break. And I think ZM's undervalued. Oh, here's the NASDAQ. I know a lot of people worried about the NASDAQ. What is it? Rebalancing. I don't think it's that significant, but we'll see. So it says here that the 7 largest stocks in the NASDAQ 100 will be diluted down to 44% in the index from 56%. So NVIDIA, Microsoft, Apple. Okay, NVIDIA and Microsoft are the most affected by the readjustment, each falling about 3 percentage points. So NVIDIA and Microsoft are going to suffer the most. Apple will still be the biggest stock in the index at 11.5%. That's crazy. Over 10% of the whole NASDAQ is Apple. That's insane. So it's going to drop from 12.8% to 11%. Information technology stocks as a group will account for 49% of the index, down from 51%. So IT down 2%. No other sector will see a change of more than 2% points. Okay, Broadcom will score the biggest increase in its weight to about. So Broadcom could be an upside move. I know people are trying to short it. I don't think it makes sense to short the Qs because all the macro backdrop is very bullish. So if anything, you might want to go long Broadcom. I wouldn't do it either because I don't really care about Broadcom on some rebalancing act. But Broadcom will take the biggest brunt. Will take a bigger piece of the NASDAQ. So here's the big part. The changes mean that the QQQ trust, right, the triple Qs funds that closely follow the index will need to sell some of the biggest stocks in the market this week. So they rebalance by selling certain stocks and buying up other stocks. That's why I said Broadcom might be a good long, but I don't think if Apple sells off, it's going to go higher. And plus, we don't know if it's a sell the news event beforehand or afterhand. But it is unclear if the changes will have a significant or major effect on the prices of those stocks, given the 2-week warning of the rebalance. Exactly, 2 weeks beforehand. It's not like a surprise. The markets usually react violently or significantly on surprises, not something that's already priced in. Yeah, I don't think that's going to be a big catalyst there. Don't think so at all. China GDP deflator. Yeah, China has no inflation, which I think they're going to definitely have to start stimulating. What is this? Oh yeah, here it is. I knew I had it somewhere. According to the US government data, annualized interest payments on the US debt just crossed 900 billion for the first time in history. Interest payments. I wonder if these are monthly payments. Are these what are these quarterly, monthly, yearly payments? For the first time in history, annualized interest expenses moved in a literal straight line higher since 2020. Government spending jumped 15% in June, the same month we had the debt ceiling crisis. So yeah, that makes sense. It's quite ironic that in the same month we had a debt ceiling crisis, spending hit a near record high, annualized interest expense crossing over 900 billion. Yeah, well, I think this annualized interest payment increase of not to 900 billion, but the government's interest payments are going to go very high. So those interest payments are due to what? They're due to how high bond yields are, right? The bond yields is how much bond yields basically reflect how much the government has to pay. How do you get those bond yields down? How do you get your interest payments down? Yield curve control. And I think we're going to see yield curve control soon, whether it's from the Fed buying more, the balance sheet starts to flip, or maybe it is going to be the US Treasury buying back bond yields. We've also seen that come into play too. Oh, no, we haven't seen that, but they said Janet Yellen did talk about it. Janet Yellen talked about buying US bonds to older bonds, maybe to lower the cost of capital. Also, the shorts might be getting squeezed. So either way, it could be happening either way. Thoughts on BELF, FP, EXTR long term, EXTR freedom. Well, if you want to jump over to the blue tube, link in the bio, blink in the bio. I got to use like cover words because I don't want to get shadow banned. Then I can show you that EXTR, long term extreme networks. I mean, long term is going to be more fundamental. So I don't even know what this company is. I'd have to do some research. It looks like a very strong bottoming pattern, though, whatever EXTR is. That's a very strong bottoming pattern there. EXTR. Let's look up. Let's look up EXTR. See what we got here. What is EXTR? This would be a really quick analysis. Communication equipment. Okay, communications equipment company, $3.5 billion. 3.5 market cap. Forward PE very low. Looks like they have good earnings prospects. Looks like their earnings have actually been rebounding pretty consistently from 2020. That's good. And they basically do they compete with Zoom? What is a software-driven network solution worldwide, design, develops, and manufactures wired and wireless network infrastructure equipment, develops software for the network management, policy, analytics, security, and access controls. The company offers Extreme Cloud IQ, ML AI-powered wired and wireless cloud network management solutions that offer advanced visibility and control over the users, devices, and applications. Never heard of them, but sounds good. Sounds good. Does sound good. Scroll their statements. What does their balance sheet look like? Let me quickly look at their balance sheet, because you're asking long term. Looks like their earnings are not terrible. Their debt to equity ratio is kind of bad though. They have a lot of debt. So if they don't turn a profit, they don't have a very good debt to equity ratio. So their balance sheet is a little in trouble, but everything else looks solid. Probably have a lot of risks there. But yeah, technically on a technical basis, EXTR looks pretty solid, bro. EXTR. BELF. FB. What is this? L-Fuse? I mean, that's breaking out to all-time highs. That's pretty clear. Long term, I'm not sure, because again, I don't know what it is. That's a crazy company, but on a technical basis, this thing's been skyrocketing. And as the whole cycle turns, then we should be moving higher. Bell FB, that's weird. So many stocks. Electronic components. Okay, this is a micro cap. I'd be careful of this thing. Yeah, this is pretty much a micro cap, under $1 billion. Net income has been up a lot. Their earnings, revenue growth. They do have revenue growth. Cost of revenue, gross profits. Net income's been up. This is yeah. I don't know long term. I'd have to know the thesis, right? Because looks like they don't have a whole lot of financials. This Bell Fuse, they don't have a lot of financials, so you really got to believe in the thesis. You're taking a big risk with a company like this. It's under $1 billion. That reminds me of FUV, Archimoto. How are they doing? No way. Archimoto basically went bankrupt. Wow. They're at a 10. This is a micro cap. I used to invest in this company. It went up to, wow, FUV. Rest in peace for those of you who held FUV. It is at a 10 million micro cap, 10 million market cap. That's crazy. They got crushed, FUV. I'm going to take a look at what the stock prices. Yeah, this is an example of why people can really get crushed. Look at this. Look at this stock. Archimoto. And I believed in it. Remember buying it at like a couple cents, but they reverse split the stock, so it doesn't look the same. Yeah, Archimoto went up to $30. So here, $688, and then it just dumped. That is insane. That is one of the biggest dumps. How much did it fall from the highs? The 21, 20, 99.8%, basically 99.9%. So this is why these stocks are crazy. You got to be careful with some of these penny stocks, unless they have a real narrative. I got out way before this though. I think I got out way like from this price, it would have been like 140 or something. But that was a dump. I was very wrong about this company. IWM making new highs on the day. QQQ trying to move to new highs. AMD's holding that level. ZM still consolidating here. Roku maybe starting to show some support. I'm not sure. Tesla retesting VWAP. Let's take a look at Google. Oh, Google's dumping hard. Any news? having issues with the TOS. Maybe just having too many things on. Oh, that sucks. Let me try it on this one. All right, so Google, what's going on with Google here? Well, Credit Suisse raised their price target on Google to 150. I don't see anything there. Maybe this view, I don't know. How's this view? If you guys are watching on the YouTube, what does this view look like? Maybe I'll switch to this view so you can see more stocks. So what I would do, because we already have the Qs on this side, IWM, what I would do is probably put, let's see, I'm going to put the dollar up here. I don't know if I really care about the dollar, but this is how I would trade in the past. Got Tesla here. Let's go Apple. Oh, I didn't realize Apple's making a big move higher. It keeps trying to call me. Yeah, no problem, man. Thanks, Freedom. Go check out the newsletter. It comes out every week on Saturday. Subscribe to support. Tesla, Apple, Google, AMD. So let's get AMD down here. For now, at least. We'll do this for now. I don't know if it looks any better. AMD, and then Amazon's starting to move up that level. Amazon's consolidating here at 136. Meta, very flat bottom at 305. Man, Meta had a nice bottoming there. See, what is it looking like? Oh, yeah, that was nice. Now, if there was a time to enter Meta, it probably would have been at that 305 level. That was a previous support resistance level. Previous support at 305. Held that level. Obviously, you can't really see it because my face is in the way. There you go. So you had Facebook, Apple, whatever you want to call it. I mean, not Apple. You had Facebook, Meta supporting the previous level, which was, this was what, last week on Wednesday at 305. Very clear support there. There we go. Yeah, very clear support at 305. Look at that. And you have a triple bottoming here. You have a lot of bottoming action here. So we zoom in, and then here's the downtrend. So it's going to attempt to break that downtrend. But that's a good pullback support play right there. Look at all this bottoming action. A lot of capitulation there. If you go to the 30-minute chart, you get 4 wicks. You get 4 wicks and then a move higher with the market support. So yeah, that's the meta trade or the meta entry if you were interested. I am not. See what this big term chart, man, this meta is extended. But it's probably headed for all-time highs eventually from the lows. It's crazy how people think we're in a bear market when you got Meta, one of the biggest companies in the world, up 250%. 250% did a 2.5x from the lows, and that's a bear market. That doesn't make sense. Oh my goodness. Who is this? Urges SEC to investigate Tesla over Twitter ties, corporate governance. Oh goodness, here we go. They're all going to attack Tesla into earnings season. Well, you just got to perform. You have to perform, Elon. Anything in the cryptoverse going on? Is this in the morning? House vote on crypto stablecoin bill now delayed a week. I think we're getting close. We're getting close to the regulation getting cleared and the ETF. We're getting close. No way. Super Bowl. Patrick Mahomes launches his own NFT platform. Here we go. Here comes the NFT. Here comes back the Web3 narrative. Here it comes. Patrick Mahomes. You guys watch Patrick Mahomes, huh? Kansas City Chiefs quarterback Patrick Mahomes has already won a well, sorry, I'm over here stuck on Meta. Let's go to see if this chart is working. That's crazy, man. How does that happen? There, let me turn it off first. I think it's frozen. AMD with the pullback though. Let's see if AMD can hold this level. I do want to add to the AMD trade. I think it's the 115, January 21, 115 calls. So this was the resistance from yesterday for AMD. See if we can hold that. What do you say, Dimash? Enphase has been moving nicely. I haven't even looked at Enphase. I'm gonna look on the other chart, see what Enphase looks like. Yeah, it looks like it's starting to support the trend, the big long-term trend now. Oh, it's back to that cup and handle, that double bottom, and it's testing the neckline. It is now testing the 187 neckline. Yeah, that's really good for Enphase. And once Enphase gets to like 190, pretty much a done deal. It fills the gap at 220. Okay, so Enphase is back. Risk back on the table. Nice call out there. So yeah, I have what is that? Okay, we have AMD up there, but I wanted to check this out really quick. Oh, no wonder I got too many tabs open. Super Bowl champion Patrick Mahomes, first athletes to make a big NFT splash back in 2021. Now he's diving back in with his own Museum of Mahomes NFT platform, extending the branding from his earlier drop set to debut its first collectibles in September. Museums of Mahomes will serve up digital collectibles as NFTs, such as which will be tied to real-world perks. Like what? That's interesting. Everybody, here comes the NFT craze again. Everybody thought it was dead and wasn't coming back. Looks like it's going to come back. Now Aave's stablecoin is starting to catch some. Aave's stablecoin is starting to catch some wind here. It's been less than 48 hours since DeFi lender Aave, who does lending and borrowing, decentralized lending and borrowing off the Ethereum network, released its new algorithmic dollar-pegged stablecoin GHO on Ethereum, and already some 2.5 million coins have been minted, according to the stats by DeFi Llama. The launch was approved nearly unanimously by holders of the protocol governance token AAVA. Aave's GHO stablecoin displays the potential growth in the cryptocurrency market, considering so the high returns 32% returns. What does that mean? Fractional ownership from 10K, art accessibility, I don't even know what that means. The Aave DAO oversees governance GHO, including settings and adjusting the total supply interest rate, and facilitator minting caps, determining risk parameters, and approving the governance facility. A whole lot of blah blah blah. It's basically a new stablecoin. So Aave releasing a stablecoin. I'd have to have my brother explain all this stuff, because they are using Chainlink also for price feeds and for some type of interoperability with their stablecoin. Yeah, that's too smart. That's too complicated for me. I only know the macro. But we got to keep our eye on this stuff. Crypto exchange Binance finalizes Bitcoin Lightning Network integration. That's going to be big. The Lightning Network. Man, there's so much stuff starting to rise. TPL, yeah, we do TPL. My bad, I didn't even see that. Yeah, let's take a look at TPL. Texas Pacific. I'm gonna switch when I look at TPL. Chainlink launches mainnet. Actually, let me pull this up. There we go. I'll read this article next. We got some Chainlink news here. So what I'm gonna do is when we look at TPL, I'm gonna switch to the other screen. All right, there we go. So here's TPL. Texas Pacific. I'm gonna go to the weekly chart. So whoa, wow, what the heck? Dang, this is old school company, huh? This ain't no joke. Texas Pacific. Texas Pacific Land Corporation. Interesting. So you're looking for that pullback support, huh? Let's pull on the simple moving averages. All right, so it is holding the 200 weekly moving average. That's good news. It's holding that 200 weekly moving average, and it looks like if we go to the daily, the next resistance level, or in general the 1290 level. Man, this thing with options, imagine. No, I'm just kidding. I know you don't like options, but that would be interesting. Cup and handle here, very clear cup and handle. Now it's holding higher. So you so you get the cup and handle. You're getting the cup and handle action here. Oops, didn't mean to do that. The cup and handle off the 200 weekly moving average, right? So here's your cup and handle, double bottom, got rejected there, but as long as it holds this previous level, should be good. So what, 13.6, 13.6, I would say. Yeah, as long as we hold above 13.6, then this thing is looking pretty good. And you just let it retest that 1440 level. Texas Pacific, TPL. I want to see what they do though. Let's take a quick insight look at what TPL does. $11 billion company, oil and gas company. Balance sheet's solid. They ain't got no debt. Gross margins 96%. What? That's insane. If that is true, is this new? That is insane. 96% gross margins versus the industry standard. I don't know what the industry standard is, but 96% is a lot. Oh, okay. All right, I'll use that one. Oh shoot, my bad. I didn't even realize that we switched to the off the charts. But yeah, that's interesting. Now the question is, who are they competing with? In this region, ConocoPhillips, Canadian Natural Gas. So they're top 10, top 15. So this is a top 15 company in oil and gas. Are all margins that good though? Wow. That was interesting. Let me see. Dude, they have top 2 margins. The other company is $100 million company. So I don't know if they can keep this up because I don't really know. I want to see where they're coming from. But TPL, 96% margins is insane for $11 billion company. Yeah, those are crazy margins. That's software type margins. Where are they located? Dang, dude, did Chesapeake Energy go that low? I remember that company. Everybody was bullish on it. It's crazy. All right, so yeah, 11 TPL, very great margins. US Energy, where are they actually located? This is Texas, duh. Texas Pacific. Yeah, dude, I mean, they have really good margins and the chart looks solid. The chart looks really solid. I like that. That is insane margins. The PE is coming down. PE is a little high, but the forward PE is lower, so that's good. No debt, no leverage, so they should be pretty solid. Balance sheet looks like it's doing pretty well. EPS has been climbing 2022. That's probably going to go higher. They might be flat this year just because of how the 2022 is the inflation trade, right? Energy prices surged, so a lot of companies did good following that. So their next report is what you're going to want to look for. Maybe you wait till after the report, but that report isn't till August 1st. So yeah, that's TPL. Very nice cup and handle pattern though. Obviously, it looks exactly like ENPH, right? It looks like a lot of energy stocks are actually forming this type of pattern. So once you get over that 1450 level, 1450 and hold, it looks like a little bit like open door. Looks a little bit like open door. So that's what you're looking at there. Got a little bit of resistance here. That's what I would say. Looks pretty solid though. That's TPL. Yeah, you're welcome. Massive insider buying taking place for a month now on TPL. It's in Texas. Bro, the margins at 96%. It sounds too good to be true, but those are insane margins. Those are insane margins. I'm not really an expert on the oil and gas industry. I mostly focus on disruptive innovation more than anything. So I can't really go into too many. I don't have too much background knowledge on it. But just looking at the margins, there's no debt. They've been gaining revenue. The technical pattern, the pattern looks great. Looks like it has a great pattern. Energy stocks are set to move higher still, even though people You know, even the oil's down, it's just oil that's getting crushed. So yeah, it looks pretty good. All right, and then I'm gonna switch over to this Chainlink article that's coming out. We're gonna read a little bit of this. Let's see, CCIP. Is this the video? That looked like it was just a video. Oh, it's a thread. Okay. Oh, I see. This is a whole thread. All right. Cool. So this is Chainlink. If you guys are not familiar with Chainlink, it is crypto infrastructure, and we're very bullish on Chainlink. Probably the riskiest asset that I would promote. No, I'm just playing. I'm not promoting it. This is the most risky asset by far that I am very bullish on, with the small market cap. I think it's like 3 billion. Usually I go with mega caps, but it is disruptive innovation. Most people are long cryptos that are just meme coins, right? Shiba coin, Dogecoin, or all these other tokens, Polkadot. But Chainlink is actually working with the Swift central banking network. Chainlink is the most widely used oracle. Is the most widely used oracle on the whole blockchain, or the whole crypto space. What is an oracle? It is the thing that connects real world data to the crypto network, right? So if you're going to get Web3, if you're going to get decentralized finance, you have to be pulling real world data, social security, documentation from the real world, and connect it to the blockchain. Chainlink does that. It does a whole lot of other things too. It's the most secure by far, has the most data by far, and has proven itself in the Swift, the global banking Swift messaging system network is literally using Chainlink. The former Google CEO, Eric Schmidt, is working with Chainlink also. He came out of retirement to work with Chainlink. I wonder why? Because he probably thinks it's a big project. He knows it's going to the moon. No, I'm just playing. Yeah. And also, you've had some reports from Bank of America. Okay, I don't even have Chainlink up here. Let me throw Chainlink up here. You have some reports from Bank of America. What the heck is this? Interlink Electronics? No way, bro. There's actually a stock, Interlink chain. That's crazy. That's not what I was looking for. So you have where is Chainlink? Oh, there it is. So you have a couple. Who is it? Is it Citigroup? It's either Citigroup or Bank of America said that Chainlink will power DeFi, decentralized finance. Chainlink could be bigger than Bitcoin, actually, is what. Now, I know that sounds crazy. People are going to get upset about that. But this is what, who is it? Citibank, I think some analyst said that could be bigger than Bitcoin in the future. But it is on the Ethereum network. And the point is, it's an infrastructure coin. Everybody's going to need it to build Web3, NFTs, any kind of data. So they have a couple systems. They have proof of reserves, right? So you prove in real time that a company has the assets to meet the liabilities, and they're way ahead on that front. You have CCIP, which is cross-chain interoperability, so that other blockchains, all blockchains can interoperate with each other. They can all communicate with each other and make transactions faster, cheaper, more efficient. That's why the Swift banking system is trying to use it. And also it's verification, right? You're verifying something is true. That's what they do. They verify that something is true without any centralized authority having a say in it. It's a smart contract. Yeah, this is the Chainlink price action right now. We bought down here at like 5. Yeah, 5. I think we started buying at 5 from top down. Okay, it's a thread. And oh, is it Bank of America? Okay, Bank of America said that Chainlink could be bigger than Bitcoin. Ooh, that's a lot of data there. I'm gonna have to drink this coffee before we get in that Chainlink god. All right, it looks like we're gonna get into some crypto here. We're gonna be reading some crypto stuff here. If you want to stick around, let me get me some coffee so I can read through this. And and then we're gonna punch it. So give me a second here. This is CCIP official website. So I'm gonna keep when I go get my coffee, I'm gonna use the restroom really quick, come back, we're gonna talk about this crypto opportunity. I think, me personally, you guys hear me on here a lot, I love Tesla, you know, I like Ethereum, Bitcoin. This could be the biggest mover. I think just you know, everybody wants to hear price. I think if Chainlink continues to execute, we're talking in this next cycle a move to maybe 250 at the max, at the minimum, maybe 100. Maybe it doubles from where it was, maybe 100. That's a big move. So from here, we're talking at the minimum 1,000%, 10x return easily on the next cycle, which we are now starting to enter, and a possibly 3,000% return, right? This is what cryptos do. Here's a video from Swift. Oh yeah, we're gonna go over all this. And this is a big opportunity here. It's more risky bet. Don't get me wrong. This is a riskier bet than usual. This is a riskier bet because it's a new technology, but it is the safest of the riskier bets. It's not some meme coin. It's a real infrastructure that has real use cases in the real world, especially going into this AI world, this artificial. We're going to see a lot of deep fakes coming soon. And the other part of Chainlink that nobody wants to talk about because it's not there yet is proof of, what is it? Zero knowledge proofs. So proving something is true without giving the knowledge away or the data to anybody. That's fairly new, and that's really, I think that's what's going to save the world from deep AI fakes, which is proof of reserve. Zero knowledge proofs, constraining AI, negative AI, and also governments from manipulating our data. Zero knowledge proofs. It's very complicated, so we're going to dive deep into it. Just stay patient if you want to hear that next. We're going to talk about that next. I'll be right back. Here, I'll turn up the music too. TPL, when is earnings report coming out? Pays dividend too. Oh, it pays a dividend. Nice. When is earnings report coming out? Tesla's on Wednesday. Slime Z. Tesla's earnings report is on Wednesday. TPL, I don't know. If you're asking about TPL, I don't know. I do not know about TPL. All right, so I'm gonna switch this music up for a second, and I'll be back. Give me like a minute and a half. Shouldn't take too long. I'll be right back. Be right back, guys. All right, let me turn this down. There we go. Okay, so Chainlink. Looking into Chainlink. Oh, I guess that was it. CCIP. We're excited to announce that Chainlink cross-chain interoperability protocol has entered the mainnet early access phase. Avalanche, Ethereum, Optimism, Polygon blockchain. So all these blockchains can now interoperate with each other. Leading DeFi protocols, derivatives, and lending adopting, including synthetics. This synthetics is a crypto company. Well, it's not a company, but it's a crypto asset that allows you to trade stocks, synthetic assets, gold, silver, Tesla stock, whatever it is, on the blockchain in a decentralized manner. Uh, Still very risky because they're still, starting from the bottom. But as we know, it is a derivatives platform. Derivatives is a just so you know, derivatives are a for like a $2 quadrillion market, or as derivatives, right? Options, margin. That's a huge market. Derivatives is the biggest market. It's bigger than the money supply, and if they can capture that, then that's going to be a big move. And synthetics is a very small company. Anyways, that doesn't mean go buy synthetics. Do not buy synthetics. It's not what I'm saying. Connecting the multi-chain world. Let's see. So this is how it works. Cross-chain tokenization assets. Let's see. Make sure I get to this correctly. It's a thread. Yeah. So inside the crypto world, the market leaders are using the CCIP to interoperate with each other. It's almost like the current financial system, right? You have Visa. Just to make it simplified, you have Visa, you have Bank of America, you have Chase, you have Wells Fargo, you have um think of any type of financial infrastructure. Visa, Mastercards, the Swift. You don't even know you use Swift. Visa, Mastercard, all those things, they all interoperate with each other. They all got to communicate. And the problem is, as they communicate with each other, they all incur these big fees that we have to pay. We have to pay these big fees because there's all this communication, all these middlemen. So this is cutting out all the middlemen. That's what the CCIP does. It makes interoperability very quick, efficient, and fast without all the fees. Now, when this gets actually played out into the real world, that's where the use case starts to play out. But by the time that actually happens, the price of Chainlink will be much higher than this. Synthetics is a DeFi protocol that acts as a liquidity layer for an ecosystem of on-chain derivatives in the and financial instruments. One of its recent additions to Synthetics V3, the Synth Teleporter, provides users with a streamlined method for transferring liquidity between chains. This is really geeky, nerdy stuff, but it's basically the CCIP is allowing this decentralized trading of assets to happen inside of the crypto blockchain world, right? Outside of so this is a threatening. This I don't want to say threatening, but it's kind of threatening New York Stock Exchanges, right? Because is trading really fair when the market makers can see all of your buys, all your sells, right? They can see all your orders. If they're next to New York, that's why S&B Capital, the guys that we follow for trading, that I follow for trading, they're right next to the New York Stock Exchange because the closer you are, the faster the feeds, the faster the data. You have an edge on the rest of the market. So this takes away their edge, which is huge. If it does happen, if they do continue to interoperate. So yeah, that's part of that synthetics, and it's kind of showing you how it works. I don't really know how to read this stuff that well. CCIP. So let me see. Let me zone in here, and I'm actually going to remove. Let me see. Do I need to see myself? Not really. So this is how it looks. You have the Aave lending and borrowing. CCIP goes in between. So you have Aave, right? Aave and Ethereum want to communicate with Avalanche and Synthetics or whoever else, any type of network. I'm not good at reading this, so Isaiah, you're gonna have to help me out here. But anyways, CCIP goes in between and it allows them to interoperate, right? It says proposed creators of governance proposal on voting network. Aave governance participants vote on proposal. So the Aave network is communicating with CCIP, and then CCIP communicates with these other protocols. See, I have no clue how to read this. I'm gonna need something that's a little more, little easier to understand here. But what is this? Largest global financial cross chain for capital markets. This is gonna be for capital markets. Man, I never tried to read this stuff before. These are very complex. Oh, the tweet thread. Okay. My camera went out, which is fine because, I'll just keep it on here. So here's the tweet thread. We'll just go through the tweet thread instead. Alright, I think that's zoomed in. There we go. Synthetics is using CCIP to seamlessly transfer tokens across chains via highly secured burn and mint model, with CCIP synth teleporters now enabling Synthetics liquidity to flow towards areas of the highest demand, bypassing the constraints of traditional token bridges. So, more efficiency, basically, CCIP allows for more efficiency. BGD Labs is integrating CCIP into the Aave protocol to help secure Aave's cross chain governance system. We were just looking at that, I just didn't know what it meant. Of a multi-chain ecosystem with a sustainable and proven foundation for scaling to networks. Okay, so enables more scale. On July 20th, CCIP will become available to all developers across 5 test nets: Arbitrum, Avalanche, Ethereum, Sepolia, Optimism, Polygon. So it's starting to connect here. Come build the new standard, how CCIP enables cross-chain dApps, how it cross-chain tokens, how to build tokens. I'm gonna read the yeah, this is intense. Some guy said SHIT is intense down here. Look, this stuff moves so quick, dude. I don't understand it. It moves so quick. It just keeps innovating very quickly. And I think it's big. I think it's gonna be big. I'm still trying to learn exactly how it works. I get the thesis of it, but when I dive deep, it's just so confusing. It's kinda like, think about Tesla full self-driving. You get it, a car that drives itself, but when they start talking about the details, you're lost because you don't know how that stuff actually works. Now, I'm gonna click on the, Bank of America. Is this the Bank of America? Oh, Chainlink God. This guy's really good. You gotta follow this guy. Do I follow this guy? Man, I don't even follow him. He's the Chainlink God. This guy probably has the best stuff on Chainlink. Blockchain decentralized applications and tokenized assets require Oracle networks to access real-world data. It's, very simple to put it very simple. Um, oh, okay, this is Bank of America. So Bank of America, yep, this is Bank of America's global research. So it's not just us that are bullish. Bank of America is bullish on Chainlink, and they're doing research on it. It's clear that banks' endeavor to access multiple blockchains, a commonly connected connectivity layer across the various chains, will be critical to building the building blocks of adoption on chain. Blockchains don't know the price of Apple stock or the temperature. Okay, so this is a clear way to think about it. I'm just going to go through the information. Blockchains don't know the price of Apple stock or temperature. So why would you even need that? Well, if you're going to use smart contracts in a Web3 world, you're going to want to need that, and you need an Oracle, and Chainlink is that top Oracle. We view Oracle networks. This is Bank of America. We view Oracle networks as critical for next generation DLT BTC. I don't even know what that means. BCT use cases like tokenization. And you guys have heard Larry Fink talk about tokenization, right? Larry Fink, BlackRock CEO, talked about tokenization. And so this is basically critical for the tokenization of traditional assets. Blockchains and decentralized applications and tokenized assets required Oracle networks to access real-world data like market prices, time of day, weather, GPS locations, property, art ownership, NFTs, right? Election outcomes, credit worthiness of mortgages used for collateral. Connecting blockchain to real world data feeds seems simple, but providing the data in a decentralized and secure manner. And that's the hard part. How do you make it decentralized so that nobody can control or manipulate that actual message from chain to chain or from real world data to real world to the blockchain? And secure manner as far as is far more complex. We expect issuances of traditional assets in tokenized form to become the norm. Larry Fink, BlackRock, biggest asset manager in the world, is literally keep saying we're going to tokenize everything. But traditional assets and markets won't disappear overnight. And some assets like gold and real estate are physical. Investors are likely to verify through Oracle networks that that an asset exists and is held by a custodian before buying it. You want to make sure it actually exists and that somebody actually holds it before buying a token representing ownership of that asset. So in the future, you're going to be owning real estate or gold through a token, not the physical, right? Yes, people own it physically, but to get a piece of that real estate, if you tokenize real estate, instead of going through all this signing of papers and all this documentation, you just simply access the smart contract and you own a piece of real estate. Let's say if you 5 of your friends wanna own a real estate property, none of you none of you, by yourselves can own it because you don't have enough collateral, but all 5 of you can split it and own that property, through a smart contract. And instead of going through all that documentation that takes months and, months at a time, it's almost instant because you're using a smart contract that executes everything in real time. Without the ability to verify an asset's existence or view is, let me see, or view is that tokenization of pre-existing traditional assets would likely see adoption headwinds. So it has a little model down here. I can't explain the model. Um, okay, so this external APIs, this would be, I guess this would be the data sources like the real estate, gold, exchange, whatever. They communicate with the Chainlink nodes, and then Chainlink nodes communicate with the Oracle back and forth. Again, I don't know how to explain that. So yeah, but this is Bank of America's research here. So they definitely are bullish on it. No way. Ant Group, Alibaba's subsidiary of Alibaba called Ant Group, launched Ant Chain, a digital copyright service platform. Over 100 million digital records, including transaction details, copyright, property ownership certificates, uploaded to the ledger daily. So a lot of use cases here. Home Depot leverages, oh, I didn't even know this. Home Depot leverages the IBM blockchain to increase supply chain transparency, increase efficiencies related to invoice processing and vendor payments, and to reduce vendor disputes. So like companies, traditional companies are using blockchains. You just don't hear about it. Become the first luxury. I don't even know who that is. Brittling. Don't know who that is. So I'm not even gonna go there. I have no clue who that is. Mercedes-Benz leverages Eccentric's decentralized data sharing platform to monetize its supply chain data. Platform users are able to purchase the data, but are only able to view calculated results, not the underlying data, which enables companies to monetize data while preserving privacy. So, uh, Mercedes-Benz is leveraging a decentralized, and all these need Oracle networks, right? Walmart leverages Linux, Hyperledger. I bet you guys didn't know that Alibaba, Home Depot, Mercedes-Benz, Walmart, all using blockchains currently for more efficiencies for their supply chains, whatever it is, supply chains, price feeds, whatever it is. So here, Walmart leverages Linux Hyperledger distributor in partnership with IBM to increase traceability of its supply chain food. So look at the use case. You want to know where your food comes from? Well, you want to trace that. You're using a ledger, right? Something that can account where something is at any time in space. Uh, so the ledger is or the supply chain. They're using this to basically track the transparency, make sure something is true, that it came from the right source, and that the date is right, right? Instead of having expired food where you get sick, or if you know how the sometimes like lettuce, there's like a breakout in lettuce, something with the bugs in lettuce, some kind of what would you call it? Infection. I can't even think of the name of it. Something usually happens. Something can happen with your food. In order to separate that and keep it separate, you need to keep tabs on it. So this keeps tabs on the changes that happen on the supply chain because that's where a lot of the bad actors, I don't want to say just bad actors, but stupidity or ignorance comes is you have 9 different supply chains before it gets to Walmart, 9 different, uh, you know, I guess you could call it, I would just call it filter. I can't think of the word, but 9 places that it goes through, and who knows, some worker could mess up, maybe he was sick, maybe they got dirt on it, maybe something happened and got there it is, contaminated. Things can get contaminated and start spreading. So enable when you can track the supply chains, you reduce that, and there's a big use case there. That's why Walmart's using it. Identify the origins of oh, there it is, the origins of foodborne illness if an outbreak occurs. I didn't see, we were talking about it, didn't even read it. TDL, what is it? Too long, didn't read. Canada leverages Lab Freight platform, which is powered by Linux Hyperledger distributed ledger to increase efficiency of its supply chain. specifically freight transportation after 6 months of platform deployment. Walmart can okay. So yeah, the bunch of here we go. A lot of use cases, real benefits, corporate generate revenue efficiencies and reduce costs. So these corporations are generating more revenue and creating more efficiencies and reducing their costs by using the blockchains, right? Decentralized blockchain applications. This is real. Corporations are also generating incremental revenue by monetizing their data as data feeds for decentralized Oracle networks like Chainlink, AccuWeather. Associate Press monetize their data by using Chainlink, decentralized Oracle. Yep. So it is here. It's just very complicated. It's at the beginning stages. It's hard to understand. We're diving. There's a lot of stuff you could read, but we're diving deep into it because we believe this is the future of data, right? Big data. So that's Bank of America right there. See if we get through everything. And then here we got a video from the Swift network. Prices can happen in one transaction. I think we're just starting to see. Actually, you guys can't even see that, huh? I wonder if you can hear. Is there a way to hear this? I don't know because I'm not on the tab. I don't know if the audio is gonna play. Let's see. And like the programmatic workflow across enterprises can happen in one transaction. I think we're just starting to see that, and like, CCI and transactions that you know. Um, and we are seeing correct the press of a button how you can have a code transaction across multiple blockchains, right? Trigger and get executed either all of it or none of it. That's powerful. Yeah. The ability to tie those together, right, and to see them happening in a synchronized way. I agree with you. I think that's incredibly powerful. No program. All right. Well, I mean, basically, in case you missed it, our Insight Innovation Live lesson connecting blockchains overcoming fragmentation and tokenized assets is now available on demand. So this is, I guess, this is a longer forum. This is basically Swift, the Swift network. These guys are saying, "Hey, we've never been able to do this, been able to connect all these transactions instantly, right? Instead of making four separate transactions, they're all happening at the same time." But what am I saying? I can't explain this stuff. This is above my head, above my pay grade. Exciting for CCIP channeling, but can't believe I'm staying exciting after all the trauma. But it's not just Swift experimenting or whatever. Swift is clearly very far along on the CCIP path with these kinds of comments. Also from multiple. Yep. Look at this guy, $1,000 Chainlink income. There's some bulls. There you got some hyper bulls on Chainlink. Very hyper bulls. There's a lot of data here. It's just really, like I said, it's new stuff. And I'm not gonna sit here and act like I know how it works 100%. I'm more of a macro guy, but this is I believe this is gonna work. And as long as the Bitcoin network continues to chug along, I think we're gonna be solid here. Sorry, I missed these comments. These are centralized blockchains, just a heads up. Oh, yeah, those are centralized blockchains. But the point I was making mostly was that, hey, people are using blockchains, right? And inevitably, they're gonna want decentralized blockchains. Maybe not all of them, but at least to transport data. So blockchains are being used, period. Like the whole overall narrative is happening. What amount of Chainlink should be considered a good amount to hold? Good question, Dimaj. I mean, obviously, everybody's going to be a little different. I'm obviously, how would I say it? Irresponsibly long Chainlink, but I would say like 5%, maybe 5% of your portfolio. 10% if you want to get bullish. At these levels, it's really cheap. Uh, you know, really cheap at these levels. So maybe maybe 3 to 5%, or 1 to 3%. Nothing tremendous. But everybody's different, right? I'm not a financial advisor. I'm not here to tell anybody, but just a little bit of it depends on what you're trying to do. I'm more of a risk on guy, but yeah, if this thing can run to where I think it is, then yeah, 1%, 3%, 4%, right? Or if you look at your whole crypto portfolio, Bitcoin, Ethereum are also obviously number one, and there's other projects too, but this one's different. I like CCIP. I like the Chainlink network, proof of reserve, CCIP, zero knowledge proofs, Oracle network, dominant in its field. So that's what I would say. Let me see. There's a lot of stuff on here. I'm writing a post on this too. I'm writing a post about this in my own words. I can't really understand this super technical stuff. I'm not a computer scientist guy at all. Um, oh, we got some breaking news. I'm just kidding. And we are above. I'm sorry, the window went out. I know that we went out on the window. AMD's holding up there. We kind of messed up. Putin, the bridge road was seriously damaged. A terrorist attack was committed in the Crimea bridge. Okay, Binance cuts back employee benefits, citing decline in profit. Binance is starting to pull back. Sorry, my thing went out here. I'll put it on my computer. I don't think nobody cares, but let's do it anyway. Camera went out. Just so you can see I'm not a bot. I'm not a fake bot. They called it the super highway for currency. Are you talking about the bridge, the Russian bridge? Maybe you're talking about the Russian bridge, the super highway for currency. That's crazy. I need to follow this guy though, the Chainlink God. How am I not following him? All right. Um, Now let me see. I hold Chainlink and ETH because of the value for money at its current prices. Yep. It's just a hold. Yeah, it's definitely just a hold, especially ramping up into the new market. Okay, I'm gonna try to switch over. I want to see if CNBC before we get out of here. This is a long stream. Um, let's hear a little bit about what CCI or what the maybe let's see if I can find some on CNBC really quick to do some comments. Option activity exploding. Ooh, I want to hear this. Is it zero dated options?
Options trading has become popular and the ETF industry is taking notice. 0 days to expiration options are options contracts that expire the same day that they're traded. Sophisticated retail investors are using them to make a one-day bet on the direction of the markets. The heavy flows have attracted the interest of the ETF industry, which is looking to launch new options products very soon. Do these products pose any real risk to the stability of the underlying stocks or the markets in?
Oh dang, I didn't know I could do this. Dimaj, you said let's see, Dimaj, what'd you say? Have staked some ETH. Is it worth staking? Um, I don't. It really depends. Like, I don't know, man. I really don't know. I think it is worth staking. 30. You want to? If you can get 32 ETH, they might be actually changing that. It could be worth. Could be worth staking. But at this point, just stay tuned. Keep asking the questions because it's just a new space and things change all the time. But a lot of people have ETH locked up for sure. Dimaj. And there will be Chainlink staking in the future also to secure the network for interoperability and transactions and all that. So is it worth staking? I would say yeah, yes. And for me, no, I'm not going to stake it because I'm more of a trader. But if I was just holding a lot of ETH, yes, I would stake it. It really depends. Things change. So Coinbase is safe to stake. Okay, yeah, Coinbase is better to stake on. This is the zero dated options stuff. Maybe we'll get some insight into this. Options are exploding. There's a lot of market breadth.
In general, let's talk with Ed Tilley. He's the chairman and the CEO of SIBO Global Markets. Ed, these 0 days to expiration options are typically S&P 500 options. They're monthly or weekly options. They're principally traded on the final day of the contract. What's going on here? Why have they suddenly caught on with the investing community and particularly with the retail community?
Bob, as you point out, we've had options that have expired every on a single day for 50 years. The phenomenon that we're watching now is the interest in investors, both retail, institution, professional market makers like the groups that are standing behind me, really want to express an opinion on the shortest duration possible in the market. And those happen to be expirations that are every day in the S&P 500. So we've got really, really good uptake, a lot of interest across a broad spectrum of users.
You know, it's easy to see why this kind of trading is popular, particularly with retail traders. As a retail trader, I could make a bet, as you said, a one-day bet on whether I think the S&P is going to go up or down on that day. I can sell a put, I can buy a call if I'm bullish, I get a cash settlement, and I can do it all over again tomorrow. And we know the ETF community is salivating at the chance to open more options trading ETFs in the future. But does it worry you at all that we are greatly enhancing the ways that retail traders can make short-term gambles in the stock market? And we already know, Ed, that most never make money trading options. Does it worry you at all that there's so many new variables and ways to trade now?
It doesn't bother me that there are many more ways to trade. I think we get swept up in generalizations when we say, you know, options don't make money. Look at the typical spread here in zeros. They're long open, which means really, really identifying and limiting potential risk, or they're credit spreads. That means I buy one option, I sell another. Well, naturally in a spread, I'm okay if one of those legs doesn't make money. There's 50% of the open option trade not making money. That's okay. That's a winner for a credit spread. So we have to really watch our terminology and generalization when we look at what we're empowering investors of any size, how they want to access the marketplace. And that's what we're doing.
Yeah, I want to talk a lot more about that on ETF Edge. But another subject while I have you, you've got several applications for Bitcoin ETFs to list on SIBO, including Wisdom Tree, Van Eck, ARK. There's a number of them. Can you handicap the chances for us that the SEC will finally approve the applications this time? A lot of people seem to think that this surveilling sharing agreement that you've got with the exchanges is now going to make a difference. Can you handicap the chances that the SEC is going to approve this?
Difficult for us to handicap a regulator, but what we know is the regulators after really customer protection, certainly around the ability to reach in and really surveil that underlying market. In this case, agreements among exchanges really add to transparency. That's what SIBO set out to do when it was the first to apply for a Bitcoin ETF. So the more our regulators are looking for, the more we're going to give them, and the more certainty, the more transparency we can bring to the marketplace.
Okay, we're going to have a lot more on how zero-day to expirations options work with Ed Tilley coming up on ETF Edge at 1:10 p.m. Eastern Time. You'll learn all about how they work. We're going to be joined by Michael Green. He's the Simplified Chief Strategist. He's going to explain his concerns about these.
Wow, that's interesting. So they're also, everybody wants that Bitcoin ETF. It's coming. It's going to set off crypto. That is going to set off crypto. Who is this head of commodities? Oh, you know what? You know how we're bearish on oil? Well, I am anyways. I think this guy's talking about oil right now. Too early on oil. Hey. No, I'm just kidding. The bulls got it all wrong. The world is still waiting for a real Chinese recovery. Europe is in a recession, and we still don't know if the US will have a hard landing. So this guy's bearish on oil, which I've been saying also for a long time. I'm bearish on oil. Manufacturing PMIs are just weak. The virtualization of the economy is cheaper, faster, more efficient, and you got the market share fight. So I don't know if I'll play this out because we're near the end of the stream. Just want to see if anything else we can pick up before we move forward. Let's see, anything interesting? I don't think so. Tesla. Oh, okay. Here, heck yeah. Let's do this. Let's listen to some Tesla stuff, and then we'll be done here. Of course, we want to hear the Tesla. See how these guys are on Tesla. You know, all these guys are going long Tesla right now.
Highest margin product that will hurt margins, but it'll help you. So, which will hurt prices, but so prices on their top sell. Tesla, of course, is the EV player, and they're fortunate they have such a great relationship in China because that's a lot of their volume. Ford cutting prices on their top selling, highest margin product, that's just not a good sign. So if I were to play a U.S. automaker, it'd be GM. There are lots of other choices, but the other side of that for Tesla is that it's really expanded the EV market. So they'll continue to play in that. And now they've got this dynamic pricing, which will hurt margins, but it'll help units delivered. So I wouldn't buy Tesla here. I hadn't bought it for years and years, and now's not the time for me to step into it.
Joe, the target gets raised to 265 from 170. At Wells, they still reiterate.
Bro, 265 from that's $100 increase. Wow.
Equal weight, but again, entertain that issue of, are there really multiple quote unquote legit EV plays? Because the stock market would suggest otherwise. I guess that's my point.
Clearly, the stock market is telling you who the winner is. We play this game as we approach the quarterly rebalance all the time. So Tesla is not and was not put into the JOT at the end of April like some others are. It's up for consideration at the end of July. And one of the benefits, I believe, of the strategy is that we rebalance at the end of January, April, July, and October so that we get the most recent earnings report, which we're going to get from Tesla this week, which will help me make a decision.
You would actually consider adding it now when the shares are already up 130%? I mean, at some point, momentum sort of exhausts itself and takes a breather.
It does.
It seems to be.
And then it starts to move again in the direction at which it initially started to move.
All right. All right. Well, I guess we'll see.
We will find out.
We will see final trades next.
All right. I mean, that's it. That's pretty much it, man. Let's just go over real quick as we close out what we're going to see for tomorrow, what we're looking at tomorrow. We'll be on again 10 a.m. Eastern. We'll see if there's more stories that come out. So as a review today, what we saw is that the Chinese economy is weaker. Actually, let me throw up the charts here. Sorry. The Chinese economy, let's finish our review. The Chinese economy is weaker than we thought it would be. And GDP came out weaker than expected. Actually, that looks dumb because my camera's messed up. But here, actually, this doesn't look too bad. I'll just move it over here. It looks so weird when you can't look into the camera or when you're looking away from it. Anyways, Chinese economy came out weaker than expected. Okay. So what does that mean? That means oil prices are not really going to surge. Like we just heard, the Chinese reopening didn't really materialize yet. Now, this is bullish for capital markets because they're going to be printing money. They're going to have to print more stimulus, and that's going to flow into capital markets, not the economy. The economy takes time. Therefore, deflation continues to take precedent. We're seeing more deflation than inflation happen. Well, there's not inflation happening. It's just coming down. There isn't really inflation surging for all those guys that say inflation is real. Bro, your prices are elevated from the past. They're not going higher. It's coming down. Inflation is coming down. It's still elevated. It's still coming down. So the manufacturing sector in the world is still in recession territory. And that should bring oil lower. Look, we can't get above 75. Remember I said 75 is one of the real levels we need to see oil get above. I am worried about it, but we are capitulating. We can't get above it. We just can't do it. The global economy is still kind of weak. So we're in this Goldilocks scenario where growth is not collapsing. It's still in expansion territory. It's just slowing down, but inflation is definitely slowing down. We do see that. It's not going higher. It is slowing down. And so if oil can drop, then inflation is really going to go lower. This is just for the equity market, for the crypto market. If inflation falls even further, that's going to, decrease the costs or the risks, the inflation risks. I appreciate it. Appreciate the badge, Dimaj. Appreciate you out there. The support. Shout out to you guys. So anyways, yeah, looking at oil, it should be coming lower. We look at the VIX, right? We're going to go over this tomorrow too, but all the volatility indexes are coming down. Triple B spreads are coming down, which is positive. That is risk taking into the market. Obviously, look at S&P is bidding higher. Let's go to that monthly chart. Check out this monthly chart. The monthly chart is complete. Like, bro, that's a bear market. Look at that. What are you talking about? Like, we're almost at the all-time highs, right? We're near all-time highs for S&P 500. This earnings season could very well take us to all-time highs. We might get ahead of our skis if we do, because it's not over yet, right? We're not out of the clear yet until the Fed reverses, until inflation is moderated completely and the Fed reverses, or we get more productivity into the market. It's a bear market for the bears. Yeah, unfortunately. I would love to debate him. I'm still waiting for that guy on TikTok. I guess he's kind of busy. We had to reschedule. He's bearish. Maybe he's gonna switch his view, but seems like a cool guy anyway. I'm not trying to, I know people want to see a bloodbath. Only if people, we probably won't get a bloodbath because you'll get banned on TikTok for getting aggressive, right? Being too masculine. Anyways, S&P breaking out, Qs breaking out, right? Now, Bitcoin is still far behind, and so is Ethereum. So I'm looking for that God candle. Keep this in mind, that God candle will come. We get that big candle to 37K. There's a lot of pressure there. That Bitcoin ETF, the tokenization of everything is in purview for the future. We're seeing it happen. Bitcoin dominance is starting to come down because the tokenization, because of the new securities. Well, it's really kind of just, it's not, it's, how would I say this? The new, if XRP is a security, a lot of cryptos can be securities. Therefore, altcoins are not as risky as we thought they were. They're still risky, but people are going to take risk in them. They're going to be on exchanges. Bitcoin dominance comes back down. I don't think Bitcoin dominance needs to really go to all-time highs. I don't think it really matters. It's just looking at altcoin season versus, Bitcoin's altcoin season. That's all it's really telling you, altcoin season. So anyways, yeah, so China, right, weaker than expected. They're going to print earnings. We're going into earnings. Tesla, obviously, and Netflix on Wednesday are going to be the big bets that we're looking at. Today we saw the manufacturing PMI. Where is it at? We saw the New York State Empire manufacturing PMI. Here it is. I call it PMI, but it's the manufacturing index. Get above zero, right? Stay above zero for a second month in a row. It decelerated month over month. But this signals recovery in the PMIs. This signals a manufacturing recovery is taking place. We're still negative, but we're slowly starting to grind back up. And we saw that in the ISM last week when new orders started to climb and when inventories started to fall. So keep that in mind. Yes, manufacturing is negative, but it is rebounding. All right. And I think that covers everything today. What else did we go over today? Other than the technicals, I think we just hit, Bitcoin, crypto inflows are starting to pick up. Went over Chainlink a little bit. And Bespoke, I love the Bespoke research. I'm going to keep up with that stuff. I will be releasing some more videos on the TikTok today and on the YouTube to try to get those out from Saturday. Our big macro, it's like an hour long. So I'm trying to cut some good clips on there for people who have a low attention span or just didn't want to hear the whole thing. Yeah, it's kind of, hear me talk for an hour. Nobody wants to hear that. All right. Anyways, shout out to you guys, Team Mind Growth. Appreciate it. I appreciate you guys showing up today. Shout out to all of you. I'll be on again tomorrow, Monday, right? Monday through Friday. We will be on 10 a.m. Eastern time. And prepared to give you the best macro news, the best, well, I don't know, there's probably guys better than me, but I'm going to give you the macro technicals, right? What's changing in the market? What do we see? And keep this in mind, the big macro change here is the US dollar is breaking down. That is the signal, bro. That is the signal that risk on is back. That is the big risk on signal. Look at the last time, 16th through the 16th, from December 17th through the 18th. This whole period right here where the dollar fell, right? And I'm just going to point this up here. This whole period, the dollar fell. You had 10-year yields climbing. 10-year yields were going high. So rates, we were up. The Fed's balance sheet was declining. Here it is right here. The Fed's balance sheet was flat. So they were no longer cutting or whatever, but it was declining. And the Fed funds rate, global liquidity was picking up, but the Fed's funds rate was actually going up. They were hiking, but the dollar was falling. Okay. The dollar was falling, and this was the bull market. This was a big upside move. I wish the guy who came on here earlier and told me I was wrong. Roku was strong. Yeah, Roku's holding up. Just so you know, Roku is holding up right now. I don't know. I might enter later in the day. Sometimes I get in trades later to see how the price action works. But the dollar is collapsing. Big risk on move here. And we'll see you guys again tomorrow. Appreciate you guys showing up. Shout out to all of you. Wouldn't be here without you. Love you. Stay blessed. Okay. Eat good. Eat healthy. Healthier than you could. Live longer. Get your exercise today, whether it's a walk, whether it's lifting weights. And most of all, stay blessed. Christ is King. Let's go. Catch you guys later. Peace.